The summit with an exciting keynote from, sorry, now let's kick off this event with an exciting keynote speaker from the head of Web3 at Google, Rich Wigman.
Hey everyone, welcome to the AiFi Summit. My name is Rich Widman. I run our team. I've been at Google for 6 years now, and when I was asked actually to come and talk at this summit, I thought it was worth peeling away from some of the other ETH Denver crypto activity that's happening here. I'm assuming that everyone here is here for ETH Denver and is going to the mainnet events and all of that. I think maybe I have 12 minutes. I'm going to try and do it in half of that time. But one of the things I want to impress upon you is really two things. One is I want to tell you a little bit about Google's philosophy as it comes to open, permissionless, and decentralized systems in the crypto space and the opportunity that it holds for the AI space. And then the second thing I want to focus on is really just a call to action for the folks in this room and the importance of the work that you guys are all doing. For folks who have not worked with the Google crypto team or the Google Web3 team, primarily our focus has been building that connective tissue, the connectivity, the bridge between the Web 2 world and Web 2 native developers, and then crypto world and the crypto native developers. And I think folks who have spent a lot of time, particularly if you talk to a developer who's been building in cloud or in mobile and then has moved into crypto, they will tell you that crypto has had a long way to go in terms of creating a similarly delightful developer experience. And that has been a pain point for the ecosystem. So a big part of our remit, a big part of our charge is leveraging Google's properties, leveraging Google's surface area, our distribution, and our familiarity and some of the wisdom we've learned over the last couple of years in terms of building technology that supports the crypto ecosystem, including index data sets and nodes, and bringing that into the crypto space. What you see on the board here, and I'm not going to talk through this because this isn't like supposed to be some shill competition, and I think you'll just find it interesting in and of itself, is our Web3 portal. So we're the only large tech company that has a crypto-focused property, a Web3-focused property. You can visit this portal, it's public, you can Google it. And you may have also been reading tweets about it. Most people are coming to this portal because of what we have done in terms of innovations for testnet faucets. So we're the only testnet faucet in the crypto community that doesn't require a mainnet balance, and it's because we put some of that Google magic in terms of how we deal with Sybil resistance. And we brought that to the benefit of a lot of the protocols in this space to help them go from testnet to mainnet and launch. I think maybe I'll just sort of end, sort of the Google points here and then talk a little bit about the bigger opportunity, why I personally care about this space, with just a note that our team functions differently than how you may be thinking about Google in other senses, right? Most people use search. There's a lot of Android users in the audience. That's typically the case with the developer community, so cheers to that. But I think most folks are used to dealing with Google in terms of, the Google ecosystem and having these sort of closed walls and these particular properties that we have been using that are centralized. And our team has really focused differently on this, and you can kind of look at how we've built in this space sort of as the proof point. So just to give you a comparison, like Microsoft and AWS, right? When they looked at the crypto ecosystem, the first thing that they did, if you've been in the space long enough, is they built a managed blockchain service. I guess their view was that people liked append-only ledgers, and they thought that an AWS append-only ledger would somehow be superior to that of Ethereum or Bitcoin or Solana or any of the other ecosystems that started to develop. And we fundamentally disagree with that approach, and I think it bears out in what we've decided to build. We are not building our own protocol. In fact, much of what we build is free tools for the developer community. And it also involves us working very closely with the protocols who are actually building a lot of the innovative and foundational work in this ecosystem. And so I think that's one thing I always like to impress upon the folks that I talk to in this space, largely because It's not necessarily how people are used to thinking about our team, but it is one of the things that I'm most proud of. And it's one of the reasons why I've stayed at Google for so long is it really is an opportunity to reframe how people think about our technology and our role in the space. AI. That's basically why everyone's here, I would hope. This is really an opportunity, I think, for all of the builders in this space that care about decentralized and permissionless ecosystems. This is the opportunity to make the case. If you're really thinking about the world in which we can transact in digitally native forms of currency across open and permissionless systems, crypto is really the last and best hope for that. And one of the things that I think is quite interesting about the opportunity as it relates to AI now is crypto has a head start compared to just about every other vertical. And what do I mean by that? So if I want to create a verticalized artificial intelligence or an agentic platform to buy and sell car insurance, or to negotiate the price of a home, or perhaps to shop around for a particular piece of clothing on Amazon, I can have it make recommendations, but I cannot have it digitally transact in a digital form of currency on chain. And by the way, no verticalized AI probably for some time will be able to do that unless it's in the crypto space. And so that's what I think is really a unique opportunity. It's really the $1 trillion opportunity that exists for everyone in this room. And I think there's actually a panel titled The $1 Trillion Opportunity of Crypto and AI. The $1 trillion opportunity is that. It's that crypto has a head start in moving digitally native forms of value. And all of these agentic models are going to function much like people do based on incentives. And right now, the only way to do that is open and permissionless is on chain. And so that's what we think is really a unique opportunity. One of the things that I'll just sort of say here is we're not really in the business of a winner take all model in this sense. So a lot of the things that we see happening with folks in this room, some of whom we've talked with on the product and engineering side already, is really about a bring your own agent, bring your own model approach, and then equipping them with the Web3 native tools to allow them to interact on chain, query data in real time using RPC, navigate index data sets, et cetera. And so I'm very excited to not only share this with you, but also to listen today about a lot of the innovation that's going to be happening in this space, and ultimately to learn a little bit about what you guys are building. So I think there's sort of this idea in my mind where with this opportunity comes potentially some risk, and I'll sort of close with this, which is crypto, since I've been in the space since 2016, has this really great habit of just about when we're going to meet this like watershed moment and get legitimization or get regulatory clarity, we somehow fumble the ball, either because of something that happens in the news, or we can talk about bad actors in the space, or we can talk about fraud. And so I would just implore everyone in here that with this opportunity comes that risk that if we do not solve this problem of how do we get agentic AI to interact and operate in open and permissionless systems, it's highly likely that someone else will solve it, and it will not be aligned with a lot of the ethos of this community. And so I think that's one of the things that keeps me in the space. It's one of the things that I know that my team is wired towards helping enable. And I think everyone in this room would probably agree that a future where we have agentic models operating in these permissionless systems that aren't just taken or not just for people to use, but also for these sort of digitally native intelligences. That's sort of what we're all going for. And so I'm really, really happy to be here. And thank you for giving me an opportunity to share a little bit about our point of view. You can go to this website. You can look me up on LinkedIn. I have my Telegram. I actually, we spend a lot of time with builders. That's frankly how we do most of our work, is in the trenches. And so if you haven't met our team, if you haven't worked with us, I really do encourage you to reach out. We're not here to just prognosticate and tell you what the solutions are. In fact, we're doing a lot of learning ourselves. And so that's what I'm looking forward to today, is learning a lot about how you guys are all thinking about this and hearing from some of the other panelists and some of the content. So thank you. And I hope you guys enjoy the rest of ETH Denver. and the rest of this particular summit.
Your picture. Cool. Well, thank you so much for that, Rich. It's really cool to see the Web2 tech giants embracing the AI space and nurturing the developers to be able to transition easily from Web2 development into Web3 development. And this is what Google is building. So I'm really excited to see where that goes in the future. So next up, we would like to introduce our second keynote speaker from GAIB. We have Matilda. So Matilda is going to be unlocking some alpha on their latest AI Summit report. So in this report, they talk about the latest innovations and trends that are shaping the AiFi space. So please welcome Matilda. Here she comes.
Okay. Hi, everyone. Welcome to the AiFi Summit. My name is Matilda. I'm the head of strategy at GAIB. At GAIB, we're building the first AI economic layer by tokenizing GPUs and their yields to give everyone direct exposure to compute assets without having to buy NVIDIA stocks. And before I formally introduce what we do, I would love to touch on the AiFi thesis. So in the past month or so, we've worked on this very long report on the AiFi thesis, which we think is a groundbreaking new sector in crypto. And today here, I'm super excited to present the first chapter of it. And then next week, we're going to release the full report. So stay tuned. And also special thanks to Perry Labs, which is our co-author. Okay, a simple start, like what is AiFi? What does it mean? It basically means just turning AI resources, such as GPUs, models, data, IP, algorithms, services, into financial assets and building financial infrastructure, primitives, instruments, and also markets around them. Before we dive into that, I want to talk about why it matters. When we turn AI resources into financial assets and hand that back to basically everyone rather than big companies or institutions, we're essentially bridging the funding gap of these financial resources. And that's from AI companies' perspective. And then from the general users or investors' perspective, we're essentially giving them yield-generating assets, regardless of whether the yield come from compute or data or models. And then once we kick off that economic flywheel, that's obviously going to foster a lot of open innovation in this space, both technological and financial innovation. And also just given the nature of crypto, that can obviously enable a lot of incentives on top of it, which will facilitate the economic flywheel as well. Incentives coming from protocols, native tokens coming from big ecosystems. And then at the end of the day, we want to automate this process with the help of blockchain, decentralization, to really build an entire ecosystem around AiFi. And there are 4 pillars of AiFi. So essentially 4 pillars we've explored that could be financialized, that could be turned into financial assets. Starting with compute. We can tokenize GPUs or GPU-backed assets, GPU-backed debt, GPU cash flow to enable fractional ownership of the economic value of these compute assets and also give the yield back to the investors or the holders. And then agents. I believe everyone knows virtuals and ELIZA, and tokenizing agents is not news these days anymore. And then there's a lot more we can do, right? Not just enabling financial ownership of these AI agents, but also on-chain monetization models and agent-to-agent monetization and agent communication frameworks. There's a lot to explore over there. On the data side, there are already data marketplaces leveraging crypto and also synthetic data as well, leveraging crypto, which could be financialized, giving back the yield generated or the revenue generated to the data creators. And with technologies such as like TEE, ZK, FHE, we could also ensure data privacy. And the last pillar is models. We've already seen projects such as Aura that we explored initial model offering. There are model marketplaces, and we've also seen projects that are building essentially anyone who can fine-tune foundational model and earn royalties from that. So we've explored all of those pillars, and this is what the AiFi stack looks like. So on the bottom, we've got AI infrastructure, which are essentially a lot of the layer 1, layer 2s out there, and decentralized compute networks as well. And then on top of that, we've got data, which is obviously critical for developing pretty much everything in AI, and foundational AI models, AI agents and services, intellectual property as well, which is something that projects like Story Protocol are spearheading. And on top of that, we've got registry and discovery protocols, which are essentially marketplaces for these financialized AI stacks. And this is how we see the pathways to scale. At the beginning, a lot of the efforts will be around tokenization, tokenizing GPUs, tokenizing data sets and models. And then in phase 2, we're going to leverage a lot of DeFi infrastructure. Just given the nature of all these AI assets and the yield generation potential, it's only natural to explore integration with DeFi protocols such as AMM lending and also yield trading platforms such as Pendle, so that we can allow a lot more use cases and derivatives on top of the tokenized AI assets. And then at the end of the day, we would love to see not just human beings holding, buying, trading these tokenized AI assets or financialized AI assets, but also agents that can perform such executions on top of us and generate yield on top of us, which might be more optimized. And there's also a lot of efforts building the infrastructure to facilitate the coordination on chain. So yeah, that's just a very, very brief, high-level primer of our AiFi thesis report. We're going to release the full report next week. It's going to be a lot more comprehensive. However, it's also very explorational. So I'm excited, and stay tuned. And now I would love to do a bit of intro about what we do at GAIB. We're building the first economic layer that powers AI and compute. And the on-chain part of it, we're building a new type of yield-bearing asset. And the off-chain part of it, the asset is backed by real compute cash flow. So here's why you should care. I believe we're already pretty familiar with all of the previous cycles, technological advancements that we've gone through. And right now, we're in the Gen AI era. And also, compared to the cloud era, in the Gen AI era, you could see that the revenue or like the profit dynamics have changed quite a lot. Previously, applications like Adobe, like Salesforce, accrued a lot of value. However, these days, the vast majority of value is actually captured by compute in the entire AI supply chain. This is actually, the data is actually a bit dated. I think NVIDIA's latest fiscal year revenue was like 130 billion or something, which is very big. And then also, we need yield as average investors, regardless if you're in crypto or normie. We are in a rate cutting cycle, and for us, like, it's only natural to look for alternative yield assets. And these alternative assets can be GPUs. So for every dollar you spend on an H100, would become $7 in revenue in a 4-year period. And also, Sam Altman said it himself, right? Compute is the currency of the future, and GPUs or compute hardware in general powers these compute. So they're the new type of commodity right now. Just like what gold and oil was years ago, decades ago. However, for gold and oil or other commodities, there are already financial instruments to foster liquidity, to enable tradability, but we don't have anything for GPU yet. And that's a problem. So here's how we solve the problem. We create a new type of yield-bearing assets by tokenizing GPUs and the yield. So we essentially create financial instrument on top of these GPU as a new type of commodity. And we'll also foster liquidity and build financial markets around it. And how does this work? 2 steps. The first step is financialization. The second step is liquidity. Financialization, very straightforward. Just like how we created futures and ETFs for gold more than probably like 100 years ago. Right now, we're trying to create a similar financial instrument for GPUs. And how we do it is via blockchain. And then the second step, liquidity, is really to build markets for these financial instruments and foster liquidity by incentivizing, introducing all kinds of players into the space. So this is how we solve it. More specifically, we turn these like GPU assets into a yield-bearing tokens on chain. And then we will integrate these yield-bearing tokens, which we'll call the first AI synthetic dollar, with all kinds of DeFi protocols, including AMMs, lending protocols, yield trading platforms, derivative trading platforms such as GMX, Hyperliquid, all of that, so that these yield-bearing assets not only generate passive yield for you, you can also do all kinds of stuff, such as lending it out for extra yield, such as trading the derivatives of it to hedge against the yield or leverage long the yield. And then this is the overall infrastructure where we fit into. These L1, L2s, such as Ethereum, Arbitrum Base, we see the underlying infrastructure, and then we do the financialization on top of it by launching the yield-bearing assets on these chains, and we build DeFi use cases around them. And then you can see that there's another layer, which is decentralized nodes. So this is the orchestration network that we're building. This orchestration network is very straightforward. It's essentially a set of nodes that collect data from the off-chain data centers and cloud companies that we'll work with to collect the key metrics such as liveliness, uptime, latency, proof of location, all of that, and then reach a consensus and store these data. So the holders of these yield-bearing assets, the investors, they know exactly what's going on with the underlying asset, with the underlying collateral, instead of being in a black box like what you see in TradFi. And this is a bit of intro about our team. So our CEO, Connie, he's not here today. He was the VP and founding partner of LTIV, which is the venture arm of L2 Capital. It's an asset manager based out of Hong Kong. They've done a lot of great deals, such as Babylon, EigenLayer, and so on. And he was also doing M&A at Huobi and previously in investment banking. And CTO Jun over here, he was an ex-research partner at Blizzard Fund, and tech advisor to AiFi Labs. And he was also a PhD in cryptographic research at Cornell University and White Hat hacker. And then our third co-founder, Alex, he founded GMI Cloud, which is a cloud company that generates roughly $100 million of revenue per year, serving companies such as Alibaba, Xiaomi, Ubisoft, and so on. And it's also one of the 10 NVIDIA cloud partners based out of APAC. So that's how we got all of the connections with the data centers and cloud companies around the world. And yeah, and that's me and then the rest of the team. And here's our modes. The first mode is definitely our unique access to the compute supply chain. Because for us to build financial instruments around these GPUs, or like GPU-backed debt, GPU cash flow, obviously we need to structure a lot of financing deals with these cloud companies and data centers around the world. And currently, we've got more than 10,000 GPUs in our pipeline, and they're primarily H200 and GB200. And our strategic partner, GMI Cloud, owned by our co-founder Alex, obviously is one of our first clients, essentially. And in the long term, we would love to kick off an AI economic flywheel. So to start with, we're tackling two problems, right? One is the funding of these cloud companies and data centers. And the others is the yield, like giving back the yield to the users. And once we bridge that funding gap, we can actually kick off a flywheel on the compute demand side and also the compute services side as well. Because the lower barrier for funding, by lowering the barrier of funding, because we channel liquidity from on-chain, that would just foster more innovation and encourage more cloud companies and data centers to scale faster, buy more GPUs, serve more clients, which will, in a way, foster more innovation in the space. And yeah, this is essentially our value add for each of the players in the entire ecosystem. On the supply side, which is essentially like cloud data centers, previously they have a very, very high capex in order to scale, to build new infrastructure. But then with GAIB, simply because we create an asset class and channel the liquidity from on-chain and give it to them as funding, now they can significantly reduce their capex and increase their capital efficiency and scale a lot faster to meet the demand for their enterprise-grade compute. On the investor side, previously, as an average investor like you and me, we don't really have a lot of avenues to invest into the compute sector except buying NVIDIA stocks or buying mega cap tech stocks. But those are just essentially a basket of products that we're investing into rather than just AI. Data center and cloud business is a very high barrier business. I don't think many people are able to get into it. So we're very limited in terms of investment options. But now, by simply holding GAIBs like USD AI, you can already start generating yield, and the yield comes from these real-world data center and cloud companies. So it really lowers the barrier to get a hold of these kind of asset class. And then on the demand side, because we lower the cost and the barrier for funding, that's obviously going to drive more supply into the compute side. And then that means that more AI companies that are really waiting in the long queue trying to get enterprise compute right now will be served faster and more effectively. And then on the market side, what we're trying to do in the long term is really to create a liquid, efficient market for GPU assets and derivatives of GPU assets. So that we can really liberate the market and unlock the economic potential of these assets and all of the players in the space. And these are our backers. We had a pre-seed round mid last year and was led by Hack VC, Faction, Hashed, together with a lot of other incredible investors as well as angels. Yeah, so this is where we're fitting into the market right now. If you look at the bottom, we've got the supply, which is essentially hardware players such as NVIDIA, Intel, Samsung. And then on top of it, we've got the network layer that actually serves as the infrastructure for a lot of the AiFi protocols in the space. And the service layer that offers services such as cloud services, data services. And then we've got the consumer layer, which is all kinds of AI applications such as AI agents, and AI chatbots, AI companions, all of that. But we are missing an economic layer that powers that funds a lot of the players in the space and gives the yields generated by the funding back to the users. So that's where we come in. And so we see ourselves as a financial infra. Instead of just a pure infra that sees like compute as utility, we see compute as a new type of asset. And in terms of the market size, obviously we sit at the intersection of AI, RWA, and DeFi. As you can see, that all of these three sectors have tremendous potential in terms of market opportunities. And yeah, so that's us. Feel free to follow us on Twitter, join our Telegram, and also stay tuned for our product updates, as well as the research paper that's going to come out next week. We're going to release in the next 1 to 2 months so that everyone can start generating yield from compute. Thank you.
Thank you so much. Where are we? So, an interesting thought actually that I was speaking to somebody the other day. They were talking about compute, and funnily enough, I was talking about looking at the future of actually transacting in compute power. So rather than paying for your t-shirt in dollars, you're paying with it with GPU that's run off your phone. So I'm not too sure about what that's gonna transform into, but it was an interesting conversation that I came across the other day. And we're all here building an AI, doing agents and everything. To run these agents, we need data and we need compute. So GPU is definitely going to be part of the whole entire spectrum of everything. But anyway, looking forward, how are we going to be using these agents to run an economy? How are these agents going to be used to make other people money, make the VCs money? Just jokes. But everybody, I think that the way that AI agents are really integrating and what they're going to be able to unlock within the whole entire financial industry is going to be really exciting. So that's what our next panel is entirely about. I would like to please welcome to the stage our moderator from Faction, Will, and we have another stacked up panel. We have Matilda back on from GAIB, we have Mark from Ether, we have Asa from IONET, Mark again from Exhibits, and Kai from Impossible Cloud Network.
Alrighty, really excited to be moderating this panel. My name is Will Lees. I'm a partner at Faction. We're an early stage crypto fund. Seed and A is kind of our sweet spot. Proud to be investors in GAIB and many of the other companies floating around today. So without further ado, let's kind of kick things off. It'd be great to maybe start with a quick intro from our panelists on who they are and what project they're working on. Maybe Matilda, we can kick it off with you and go down the line.
Okay, thank you. I'm Matilda. I'm the head of strategy at GAIB. We're building the first AI economic layer by tokenizing GPUs and their yields to give everyone direct exposures to compute assets without having to buy NVIDIA stocks.
Mark here, co-founder of Aether. At Aether, we build distributed GPU infrastructure for gaming and AI companies. You can think of us like an AWS or Google Cloud, except we focus exclusively on enterprise-grade GPUs. We don't actually own any of the GPUs in our cloud. They're provided by our partners, whether they're telcos or tech companies, and we effectively make that compute available in the cloud. On the AI side, it's for training models and running inference for AI agents and applications. And then on the gaming side, it's the real-time rendering or cloud gaming applications as well.
Hello, everyone. Mark Fidelman from Exhibits. We think of ourselves as kind of the base layer of compute. I liken it to like a refinery. If you look at GPUs as oil, we take that oil and we refine it into specific use cases, mainly for enterprise users.
Yeah, hi, Kai from Impossible Cloud, founder. I built large networks before for hundreds of millions of players all around the world. IPO'd that company and now building in the Web3 space. We built the decentralized infrastructure layer for everything. We started out with super AI-ready, super fast object storage, a couple of thousand enterprise customers already with a few million ARR, and trying to bring mass adoption to Web3 and make this really big.
Amazing. I guess it's helpful maybe to kind of kick things off with a high-level background on, what we're trying to do here, and it's helpful to just get a quick primer on kind of the state of AI and compute. Matilda, this is going to be a little bit repetitive from your amazing keynote, but it's probably helpful to kind of start with what major problems does AiFi aim to solve?
I think the problem that we are trying to solve is definitely the funding gap and also the yield problem. Like, problems are twofold. One is on the compute side. A lot of the cloud companies and data centers are struggling to get GPU financing slash refinancing to scale faster to meet the demand. A lot of them have a long queue of clients that want their compute, but all of their GPUs are occupied. And they really have to go through some kind of debt or equity financing and able to buy more GPUs, build out more infrastructure to serve the clients and have the capacity to meet the demand. That's on the funding side. And then the other hand is the investor side. As I was talking about during the keynote, for average investors like you and me, we don't really have a lot of options if we want to get direct exposure to compute assets, except for NVIDIA stocks, which is a bit pricey. So what we're really trying to do is to structure these like GPU financing deals and package GPU cash flows from both on-chain and off-chain world, and use that as the backing to issue yield-bearing on-chain assets, so that we can channel the funding to them and also let the users get a yield.
Yeah, I mean, I'll jump in. GPU scarcity is probably something that you've heard about in the media. Big players in the AI space like Elon Musk have come out and said things like GPUs are harder to buy than drugs, right? But then on the flip side of that, he goes and builds a massive data center with hundreds of thousands of H100s and tens of billions of dollars worth of investment. And it seems like whilst there is this kind of broad scarcity in the market, availability is definitely with the players that have the most money, right? So it's increasingly difficult for other companies outside of the top 5 biggest tech companies in the world to access this critical resource. And as we all know, to build in the AI space, you need models, data, and compute. And if you can't access the compute, it doesn't matter how good your models are, it doesn't matter how good your data is, you're not going to be building anything anytime soon. If you think about what that scarcity looks like, I think that it is a relatively persistent problem. The way that we look at AI at the moment, it seems to be that the more compute you have, the more data you have, and the more you combine those, the more performant the models get, right? It's a relatively linear equation. The AI scaling laws seem to be holding in the sense that if you have more compute and you have more data, you can get more performant models quicker, right? Which means it's effectively a cash flow problem, right? The more money you have, the more GPUs you can have, the more performant your models will be, ideally quicker than those of your competitors. What that means is that we're going to consistently need more compute, and we don't really know how much we need, right? The answer is just as much as you can give me, which is kind of driving this relatively persistent scarcity issue. We address that by looking at the inefficiency of how those resources are managed in the space, right? There are a large amount of the resources that are sitting out there that are capable of being used within the AI compute sphere that are just not optimized, right? Training runs are done in relatively kind of batched periods, right? There's significant downtime. Also, production delays happen and missed forecasts happen as well. So there's this opportunity to optimize for the efficiency of utilization within the broader compute cloud network, and that's something that we do to address the compute challenge.
Very helpful.
Yeah,
Go ahead, Mark.
I like to look at numbers since they've said a lot of things that I totally agree with. Based on current estimates, when we talk about AI agents, we talk about AGI that's coming, we need 1,000 times more compute that's currently available today. And I like to also follow the money, and I look at Amazon investing $100 billion in AI and chips and compute this year alone. That's a lot of money, but it's not enough. If current estimates hold, we need a $6 trillion investment in compute and AI. So guess what? There's a huge opportunity for investors, for the companies up here, for the industry. So just being here today and given that information, you can see how big it's going to be. I don't think most people have any idea of how AGI and AI agents are going to change their roles and their jobs and how many are going to be eliminated. I still think that's a good thing. I think we'll have better and better jobs, and we'll be looking to solve bigger and bigger problems that are more important to humanity. So I'm not worried at all, but this is a massive space. They've identified some of the issues. The big issues are compute for us. How do we get enough to address a $6 trillion shortage? And then the power. A lot of people, when you look at powering these data centers and where you're getting power from to power the compute, I think that's another big issue that doesn't get talked about enough.
Kai, I'm gonna tee you up with a question here.
Yeah, sure. So 6 trillion, I heard 9 trillion, but that's just the number that Massa said, the Vision Fund founder, what we need until 2035. No matter if it's 6 or 9, I think we all agree it's the $1 trillion opportunity that we are really having here at the intersection of AI and Web3. I think the future will look a lot different. The internet will be, there's this great post-web thing from Outlier Ventures. They talk about this. So the web, how it will look in the future will be very thin. Everybody here will be just like interacting probably on a social level and so forth. But the main internet is run by machines for machines. So machine-to-machine communication. And what you need for that is a tremendous infrastructure. And then, of course, you want to have an open, permissionless, verifiable way how the machines communicate. So when we all thought, I don't know, several years ago, Web3 is going to take off by humans using it, we might have been wrong. But I think the whole Web3 and DLT and everything, the technology that has been matured over the years is made for this AI world. And the big opportunity is now about like building this infrastructure layer that is needed. I think it can be built in a much, much more efficient way with tokenization and Web3. You need massive amounts of compute. You need massive amounts of storage, all distributed, decentralized all around the world. And I think we can build this together.
I think that's a great jumping off point. AI is not just about compute. Data and storage are obviously critical. It'd be great to just learn a little bit more about how Impossible Cloud kind of fits into the stack.
Sure. So we are, by mistake, sometimes regarded as a storage project. We started off this with storage. Always the idea of building an ecosystem. I think it's all about building an ecosystem where you ultimately need storage as some kind of fundamental layer for everything. Of course, we talk here about very high performant AI ready storage, not some kind of cold archival storage. Verifiable and distributed around the globe. And then on top of that, you need computational resources. And you always have this, what we call storage gravity. So no matter what you do, moving storage is very expensive. Storage is being created or data is being created very decentrally. So you want to store it where it's being created and you want to compute it nearby. So you need decentralized computational power as well. And we started off with storage for that reason, because we said data gravity is there. If we get this to work, companies store data with us, then everything else will follow. But the goal is like to have this as an ecosystem. We work closely together with quite a few other parties. The AiFi guys, super great what they do in the GPU space and so forth. So the idea would be to bring to regular Web2 enterprise customers or AI agents, whoever is using it, the full stack.
Amazing. And I guess, Mark, it's probably helpful for you to tag on here. How does Aether enable AI to scale more efficiently?
I think, I mean, like I spoke about before, access to resources, right? If you're not one of the tech giants, you're probably going to be struggling to access high performance GPUs. which are necessary to be building in the AI space, right? Even if you do have access, right, you're seeing a cost that is anywhere from 2 to 3x what you can get through Aether, right? So you're paying a premium, and ecosystems like AWS and Google Cloud, they know how sticky their network is, right? And when you go and you enter into these agreements with them, it's not just a pricing issue, right? It's also a lock-in issue, right? How long do you need to commit to that ecosystem just to get access to this resource that they have a stranglehold on? So for us, it's really about making sure that the accessibility is there, right? But also making sure that it's accessible in a way that allows builders access, right? We kind of think of it as being more founder friendly from a contractual perspective, giving them access to compute without, locking them into a 2-year contract, without making them pay, 50 to 100% of the compute cost upfront, right? And that does unlock a different type of AI builder. And I think those are the types of AI builders that we want, right? Enter into this application AI agent space, or phase, I should say, like the inferencing phase of the growth in the AI sector, right? Big infrastructure companies, big frontier models, they need a huge bunch of compute, right? But they're very big, well-funded machines, right? But on the application side, you've got scrappy, innovative dev shops that are experimenting and they're pushing stuff out to the market quickly. And product market fit happens, overnight in that sort of environment. And all of a sudden you go from having an agent that you're running on like a small box in your college dorm room, right, to needing potentially to serve tens, if not hundreds of thousands of users and token requests through a network in a very, very short period of time. And how do you enable those users to scale their application to meet the demand of the kind of their consumers is something that is very interesting for us.
Absolutely. And I guess Mark, the other Mark, it'd be great to hear a bit more about Exhibit's approach to tokenization, and I guess some of the unlocks and benefits you see.
I mean, for us, tokenization is kind of the key to powering us on several levels. One is to not only pay for the compute that we're giving to our users, but also the futures. I mean, you'll be able to buy futures with our token. We've announced that we're going to have a TGE that's upcoming. I can't give you the exact dates, unfortunately. But we see tokenization as the key to helping to fix that gap, that $6 trillion gap. Not all with us, obviously. There'll be other companies. There'll be the big three that have been mentioned here. But, when you, huh? Sure, we'll go with that. Tokenization is very, if you look at what you can do with it and the staking mechanisms and the reward mechanisms, and who knows what's going to happen with regulation in the next 6 months, that can really make a huge difference. I'm hoping they keep it very open, allow us to do what we want to do, but we'll find out. So I'm a big fan of tokenization. I've been doing it for the last 3 or 4 years.
Amazing. Matilda, I guess it's great to hear from you again. Once again, a little bit repetitive from the keynote, but how is AiFi bringing new monetization models to AI infrastructure? It'd be great to just understand how compute can be tokenized, how models can be tokenized, how data sets can be tokenized, and what that actually means in practice.
Yeah, absolutely. So on the compute part, a common misconception that we get is that when we tokenize compute, we tokenize compute power, we tokenize compute hardware. And then I also get a lot of questions like, what happens when it comes to depreciation? Or like, if you tokenize compute, how do you redeem the compute? And all of these questions stem from the misconception at the beginning about what we do, right? We actually take a different approach. When we tokenize compute, we don't touch the compute power hardware. We essentially structure GPU financing deals with data centers and cloud companies in the real world, and also GPU cash flows from decentralized compute platforms such as Aether. Now how it works is that these like cloud companies and data centers can use their enterprise grade GPUs such as NVIDIA H100 and H200, as well as the service contracts attached to them as the collateral to take out funding from us. And then after we fund them, we collect either interest or revenue share, and we put these back on chain. It's the same with decentralized compute protocols. We have strategic partnership with Aether, where essentially package the revenue streams of these GPUs on Aether and put that into our bundle of assets. So essentially we have a basket of GPU-backed debt, GPU cash flows, and we use that basket as the backing to issue yield-bearing on-chain asset, which we call the AI synthetic dollar. So from the user's perspective, they come here not to really use compute. If you want to use compute, go to the other 3 platforms. They come here to essentially earn yield from these compute. And we're the first to do this, to give direct access to compute generated yield to users. Yeah, so I think that's how we approach it. And on the data and model side, I'm not a perfect expert. So I would recommend everyone to stay tuned for our AiFi research report next week, because there's a lot more color to unpack over there.
Yeah, I'll maybe add a bit of color on how people can kind of plug into yield-based products based on what we do, right? So when you have a DPIN or a distributed hardware network, right, like ours with GPUs, when people contribute GPUs to our network, right, and then we then go and connect that with demand in our ecosystem, and someone will maybe buy time on a GPU in our network. Something that's really difficult for decentralized networks to manage is how do you ensure that the person that's contributing that hardware doesn't pull their hardware off the network in the middle of a contract, right? The way that decentralized networks manage that is generally through a requirement to stake, right? So if you're contributing your hardware to the network, you have to stake a certain number of tokens, and this gives the protocol the ability to slash that stake if the owner of the hardware behaves poorly or in a way that the network judges as being not in line with what we're trying to achieve. Now, what that does, of course, is adds a little bit of friction, right? So not everyone that owns GPUs necessarily wants to contribute to a certain amount of their capital to stake into the network, right? They'd maybe much rather just buy more GPUs, right? So we offset that, of course, by adding tokens into an incentive-based mechanism so that there's a higher yield in our network for those GPUs than it would be if you just put those GPUs into, say a Lambda, like a Vast AI or something. And also ensuring to the best of our ability that we have like a high utilization rate within the network as well, so we can effectively guarantee a certain amount of yield through utilization of that equipment. But there's always going to be companies that don't want to play the crypto game. They don't want to stake. Now that creates obviously friction, but it's also a bit of an opportunity, right? Because you can create third-party staking opportunities, right? Where someone who's more crypto native might say, oh, I'm going to stake on behalf of this GPU provider, and they can share with me a portion of the yield that they're generating from participating in Aether's network, right? So you can create these opportunities where you can stake on behalf of GPU providers and share in their yield that they're generating, and you can create a really, really cool asset class around that. And I think those are some of the really great yield-bearing opportunities that exist when you start to mix valuable real-world revenue-generating assets with decentralized networks.
Yeah, that's what we do.
Very cool stuff. I guess this is a question for all the panelists. Would love to hear your thoughts on some of the biggest barriers preventing AiFi from going mainstream. How can we overcome them as an industry? And yeah, how do we reach the masses?
I think the biggest one we've already mentioned, which is access to real AI, GPU chips. Also the infrastructure, it's incredibly difficult. When I learned how to put together one of these servers, at least what we do, it's incredibly difficult to source all these things and put them all together in a way that optimizes that GPU power. It's also power itself. To power these data centers is incredibly expensive. And you could see the race to build these data centers is incredibly competitive. So good luck if you're trying to build a data center and you're competing against the Googles, the Microsofts, and the Amazons of the world. So it's getting the hardware, it's making sure that the hardware is set up correctly, which is incredibly expensive, and making sure that all the different components that go into that are part of your supply chain. It's an efficient supply chain. So that's the way we look at it. That's the problems that we're facing.
I think what's super important right now, and I think this applies to a very large part of the Web3 space, caring more about revenue, real world revenue. So I think we are at a stage where Web3 has matured quite a bit, and now investors care more and more about real world use cases and revenue generation. I think once the Web3 projects prove that they're able to create real world revenue, more investment streams will open up. And I think there is a very bright future ahead. I mean, we talked about like the necessity of trillions of dollars of investment into infrastructure. At the same time, we see right now a lot more certainty happening on the regulatory side. So if it's like MiCA in Europe or the new administration in the US and so forth, and this legal certainty usually is the precursor of trillions worth of billions, hundreds of billions worth of investment from institutional investors. So I think this will come into the whole Web3 space. It will be a huge wave. Even now we might, I don't know, enter a short-term bear market or whatever, but I think there are these cycles. There will be a lot of institutional money coming into the space, and the money will flow where real-world use cases and revenues are being generated. So once we overcome this, and I think we are, as we speak, solving these problems, there's a lot of projects out there who have tremendous traction on the enterprise customer side already. This will ultimately completely take off.
Yeah, I think I totally agree. I think it's a liquidity issue, right, at the moment, and that liquidity issue is largely addressed if you can create trust that this is a stable asset class, right, that's backed by real revenue and a real business that's outside of crypto, that's just empowered by crypto. And I think that, you know, the more products that we see, like GAIB, the more educated the market becomes on their ability to get direct access to the infrastructure, and then a piece of the revenue that that infrastructure actually generates in the real world is going to be really, really attractive. So I think it's just a little bit of a factor of time, right? Proving out the model, showing how those revenues flow back into this kind of yield-based product, and then probably some regulatory elements as well, right? In the same way that we look at RWAs and regulating those, so that kind of TradFi capital can flow into those assets, I think will also have a big impact on this particular kind of asset class too.
Yeah, I think definitely agree with that. Like some of the biggest barriers or challenges are, for one, user education, and for two, like regulatory frameworks. On the user education side, I think most people these days view compute and also all of the other elements in AI as utilities rather than asset classes. And most people aren't really familiar with the economic value that could be unlocked, and also a lot of the financial and economic bottlenecks, a lot of the teams building models, agents, data are facing right now. So when they, you know, hear about tokenizing this and that, like they might become skeptical, because they'd be like, how does it work, right? But if you actually view them as asset classes, and understand that the revenue generated from these AI stacks can be actually handed back to everyday users, like communities who are contributing to AI. I think that would be very critical for us to like kick off this economic flywheel and have liquidity flowing in. And then the second is definitely regulatory frameworks, the same, similar to RWA as well. We're already, it's good, as in like we're already seeing some regulators such as Singapore in Asia, for example. Singapore, Hong Kong already have relatively progressive regulatory frameworks around real asset tokenization. I think like with regard to like Europe and the US, they're still working on it, but we're very excited to see like very clear regulatory frameworks, as in how these tokenized assets should be purchased, and the rules around it. Yeah.
Going off script a little, I guess thinking about barriers, this is one it's probably worth just asking the experts in the room on. Uh, During your sales motions, how big of a barrier is the crypto aspect and component? And I guess it's worth mentioning is the scarcity of GPU assets and kind of the demand and rush, such a factor to overcome an enterprise's, I don't know, hesitancy to touch something associated with tokens and crypto?
Yeah, I'll jump in first, but I'm sure that we're all suffering kind of similar challenges. I think first of all, the scarcity and even the price benefits of coming into the compute space through a protocol like Aether is not enough, right? It's not enough to overcome the hurdle that many companies have with dealing with crypto. The vast majority, 95% of the companies that we partner with are Web2 companies. So we've really had to build our infrastructure around being able to deal with and operate with Web2 operators. If you go and take a look, for example, at Aether's homepage, there's almost nothing related to crypto on our main portal, right? We try not to even use a honestly, there's so many little red flags and triggers that the Web2 community have related to crypto that you just need to honestly try and avoid. You're doing yourself a disservice in many cases by being too upfront about the nature of the tech that you've built, relying on the blockchain. I think at the end of the day, if you're building in crypto, you do need to ensure that all value accrues to your token, right? That's like what crypto products are structured around. So you can't have revenue that's being generated in your ecosystem that's not kind of going back to the token somehow. We've kind of overcome this by effectively standing up a service entity that operates as like a middleman that can deal directly with Web2 companies, right? So we can accept fiat payments for our services, and then that service entity then converts that into the token. So we do always extract kind of full value, but then you've got a whole nother risk factor on the volatility of the token. How do you manage that, particularly when you sign a long-term contract with a company, right? But the token might be worth this much today, and 3 months later, it might be a very different number. So it is really, really challenging. I also think that you need a very different type of person selling your product when you're dealing with Web2 companies. If you look at the sales team that we have within Aether, for example, these guys are people that have been in enterprise cloud, right? Ex-Google, ex-Oracle, not young crypto bros, These are guys that have been in the space for 15, 20 years. And you just have to kind of latch on to trust anywhere you can get it, because trust is kind of the most scarce resource when we're dealing with trust is the thing we're trying to overcome. Trust issues are the thing we're trying to overcome with Web2 companies.
Well, I'll just build on what he said. For me, I'm old enough to remember ASPs and SaaS. SaaS is still with us, but ASPs before SaaS. It's just a useless thing to do, depending on your audience, to talk about the infrastructure behind it, because most of the people in the enterprise don't really understand it. And the more you talk about, the more you confuse them. With Web3 companies, it's fine. And that's when I do talk about tokenization and all the other aspects that I know they already understand. But since we focused on the enterprise, we really don't talk about it all that much. If they want to get into it, great. In terms of the token that we'll be releasing, we're just going to incentivize them to do it. And if it's not a good enough incentive, then we got to go back to the drawing board and make sure that they understand the value of it. But a lot of people think of crypto as meme coins and scams, and a lot of it is, let's face it. We have to show them that it's not, that there's real value. It's more like airline miles are to the airlines, right? We need to be able to show that the economy that we have within our tokenization strategy, at least I'm speaking for ourselves, at Exhibits is strong enough to get them more involved. Then we also have to make it easy to onboard them. So those are some challenges. We're going to get by it, but we don't necessarily talk about the technology and how it's being done unless they want to dive pretty deep into it.
Yeah, I think I agree to everything that has been said before. Maybe nevertheless, I have a few comments. So first of all, I think what a lot of people underestimate, also a lot of probably people in the Web3 space, but also everywhere else, is the complexity building large-scale systems in tech. We have done this before for what I mentioned, a few hundred million people. I was very close to Google and Facebook, who did even one order of magnitude larger networks. Talked to the CTO of Facebook several times, how they really go very deep in designing data centers and so forth, ASICs and all that kind of stuff. And it's tremendously complex to build that. So having said this, you need to have the architecture in place that is enabling these kind of distributed systems. And then I really like to go with the fundamentals of physics. You need to think about decentral networks. Where do they have their strengths? It can be potentially be in uptime, availability, no single point of failure, also throughput if you are able to connect to many sources at the same time, latency because you might have closer proximity between customers and workload and so forth. So there are a few things where you can really double down and then create systems that are much superior. That's the fundamental. Back to your question regarding how to tackle enterprises. So there is a lot of things that you need to get right. The durability, the availability, the uptime, they have very high bars on compliance. It's super important. So you're not able to like connect all of our laptops and then sell this to enterprise customers. It's very difficult to do that. Compliance is important. Performance, as I mentioned before, they will test the system, really battle test the system. If you don't have a working product, if the architecture is not right, there is no way that you can convince any kind of enterprise customer to come. And then ultimately you can play, if you have all of that, you can play some advantages of Web3, which is essentially price, which is essentially data sovereignty, privacy. Also, availability is a huge factor. Like the attack vector is much larger. Bringing down a decentral system is much more difficult. The internet was created for good reason in a decentral way and not as a central masterpiece or whatever. And if you play all that, you are good. And then on top, what we find tremendously successful in the path to convincing thousands of enterprise customers is partnerships. So we integrate with very large Web2 companies. They make billions of revenue. They have millions of enterprise customers. They battle test our product. Of course, they ask a lot of questions around crypto and decentralized, that whatever. They battle test the product. Once you're approved there, you basically impute their trust to us, right? So because the enterprise customers run their software, they trust these vendors, and since the vendor trusts us, it's fine for the end customer. So this is the way to go, but it's a long journey, a lot of stuff that you have to get right in order to get there. Once you have built this bridge from Web2 enterprise, traditional customers, and it's not only the sales guys who look different, it's also on the customer side, they are very much different and not crypto bros. But once you have established this bridge from these Web2 enterprise customers to Web3 technology, you can build this bridge bigger and bigger.
Yeah, that's amazing to hear, and yeah, super interesting to think about, right, as we kind of cross the chasm to mainstream adoption. I guess one final question and parting thought for you all. It'd be great to just zoom out, fast forward 5 years. What do you think the AiFi economy looks like, and how does your project play a role in shaping it? Matilda, maybe you can start and we can go down the line.
Yeah, well, hopefully, fast forward to 5 years, everyone holds USD AI, and which is our AI synthetic dollar, and they could simply stake it to start generating yield coming from compute, both on-chain and off-chain compute. And also they could do a lot of interesting stuff, such as lending, such as trading the principal and yield tokens of them, such as trading the futures and options of them, so that all kinds of risk and reward demand can be met with all kinds of use cases and derivatives. And hopefully, fast forward to 5 years, a lot of the cloud companies and data centers can find it easier to get funding, to get financing / refinancing fast and effectively without having to wait for months or years at a bank or go to those like super few private lenders that could actually help them with GPU collateralized loans. So hopefully they can actually they could scale up to the speed of the demand, and all of the AI companies out there can get the compute they want, and we can see a lot of the innovation.
Yeah, I think difficult to predict kind of the 5-year time horizon for AI and AiFi. But I think that a lot of training and inferencing runs, or a significant portion, will be conducted on what is effectively a massive heterogeneous collection of hardware, right? Not just stuff sitting in data centers, but you'll be able to run effective training runs and large-scale inference on a bunch of consumer devices, right, that are plugged into the internet in the same way that we connect our devices to Wi-Fi, right? We'll be plugging into compute networks and offloading portions of our compute on local devices into this broader heterogeneous cloud environment in such a way that I think will bring the ability to earn from our own compute to consumers in a way that we're trying to bring enterprise compute earnings to consumers now. So I think that's going to be an interesting evolution in the space.
Okay, so compute will be completely decentralized. It'll move away from the three big centralized players today. It'll be very, very liquid. It'll act like a commodity. Compute will be a commodity where people are trading it. Let me rephrase that. It won't be people, it'll be AI agents. There's no way humans will be able to compete with AI agents in 5 years. It's not going to happen. You will have your own AI agent in this space, and the AI agents will be buying, selling, lending, trading compute, and it'll be completely decentralized in 5 years. That's what I see happening, and we'll see if I'm right or not.
Yeah, my prediction, 5 years, end of the decade, I would say by then, deep-in Web3 will have roughly $1 trillion worth in capex running in decentral networks. At the same time, I would say a couple $100 billion of revenue being generated, a lot of economical value being generated, mostly probably by AI agents, but also enterprise companies directly and so forth, on top of this infrastructure. And I think in 5 years, it will be clear that the race will be won by decentral versus the hyperscalers. Funny story about it. I think they really started to notice. I'm not saying which one it was. There was one of the hyperscaler companies running into myself in DEF CON Bangkok, and they asking to collaborate and so forth. I told them, look guys, we are here to dethrone the incumbents, dethrone the hyperscalers, and so forth. I mean, if you don't mind, I mean, you can run a node or whatever, a network. I'm fine. I thought I'd turn him down, and he was inviting me to the headquarters. I declined anyways, but I think they start noticing, and end of the decade, I think they will realize that decentral is the way forward.
Well, I guess we're going to have to meet again here in 5 years to circle up and revisit some of those predictions. But thank you guys so much for the panel. It's great to learn more about how you guys are pushing the space forward. So thank you.
Thanks for having us.
Thanks.
All right, hello, are we on? Cool, well, welcome back. That was a fantastic panel, guys, and I must admit, I only got the first part of it, but it was sounding pretty good in the guts of things. So, on to our next panel. So, we are going to be talking about the agentic web, and I just typed into an AI agent, what is the agentic web? So, let me tell you what that came out of, and we've got a really good bunch of people coming here today to go through the details of it. So, what is the agentic web? The agentic web is a vision of the internet where intelligent AI agents autonomously navigate, manage, and perform tasks for users, creating a more productive and personalized online experience. So, really interested to hear what these guys have to say about it. And we are going to be going from, oh no. I might need a little bit of a tech help for this one. Cool. All right, so can I please welcome to the stage our moderator from Big Brains Holdings, Naman. And we have co-founder from Pin AI, Ben. Ming Wu from OG Labs. We have Ram also from Open Ledger, Lucas from Nillion, and David is representing as the founding member from Olaf.
Should we start?
Do we have a moderator or? Oh, shit.
We don't have a moderator?
All right. Well, maybe I'm the moderator now. Anyone coming or?
Yeah, Naman from Big Brains Holdings is here, but I know him, but I actually can't see him either here. So,
All right.
you don't
Well,
mind? Are you right?
let's just kick it off. All right. Shall we go for a quick round of introductions? Yeah. So.
Awesome.
Okay, hi everyone. I'm Bill, also another co-founder of Pin AI, and I'll be the moderator, prompt. Let's do like a prompt show, right? Okay, so the topic is the rise of the agentic web. So I guess the first question I'll ask everyone is, what's your most contrarian view on what's going to happen in next year in AI and the intersection of AI and crypto? Is there anything that is going to be something that no one expect, but you believe, oh, this is going to happen. This is my bet. Put my money here.
You want me to start? Go for it. Okay. I think almost everyone can relate to that, like DeFi, right? I think AI can be a great abstract player for DeFi because DeFi obviously is too complex. You want to have as much as abstraction as possible. Like I don't have to worry about if I'm going to want to buy let's say a particular token. I don't have to worry about swapping it to another protocol, and then I don't have to worry about bridging it and stuff like that. So I think if an agent can do all of that in the backend, I can just have to give my intent and I get the required output. That's one way, obviously. And then obviously having automated trades using agents where, again, I just give an intent saying that I want to swap ETH for, Solana, and then, but if I swap it, I want to make let's say minimum $1,000 over the period of, let's say 10 days or 15 days or something like that. And an agent actually gives me the necessary stuff to follow, and then it tells me, are you okay with it? And then say, okay, there's a human in the loop, and then it happens, right? So that's one thing. And then I think governance would be a great use case for AI agents as well, because in Web3, governance is one of the most slowest processes. Not many proposals and protocols that get approved because humans actually don't go there and vote. So if we can have agents replace humans, understand how humans think, and then do governance for us, I think that would be great. These two use cases, I think, are really probably the next thing that can happen in Web3 is what I think. And then obviously there is other dApps which can be replaced by agents. I think agents are the new dApps. So I believe that'll be another evolution that will happen as well.
Cool. Who wants to take next?
Yeah, happy to. David from Ola. So we enable you to co-own your agents or outright own them. That's actually, I think, one of the big themes, not just in crypto AI, but more generally AI, that people start realizing that's quite useful not only to own your coins by owning your keys, but also to own your artificial brain by owning the models and the agents behind it outright. And that can take different shapes and forms. You can, maybe have them deployed on some decentralized substrate. You can outright own them locally in a device you control, where you control the code and any data it uses. So I think use cases for crypto AI, we heard a couple that I also believe in, and we actually have some live use cases in OLAS for DeFi and social and governance. But I suspect that we'll see also quite a lot of experimentation with these primitives, right? Like crypto tends to love speculation. We've just seen that, AI agents isn't a new thing, but really it's arrived on the crypto map with these social agents. And I think that was because of that speculative element. I suspect that any further like massive attention pull will either come from like outright clear utility, like for instance in DeFi, where you have agents really being able to offer like a much better UX, or from some very like technically or otherwise novel use case that couldn't be found like that in a more traditional AI setting. And so for instance, yeah, co-ownership is one, jointly training a model, co-owning that model, utilizing it in various use cases. I think they're all likely outcomes. And we talk about the agentic web. I think that we will see broadly across crypto AI and AI, because more generally, I think what's happening with like the web, you have, read, which we all know, reading sites, and then write with the apps, and then own a sort of, I covered already, you want to own your agent, your AI. You also want to own your coins, but really the web is moving agentic, right? And like this idea that you have sort of APIs turn more into agents, I think will be with us for some time. I imagine that a lot of businesses will start having agents that represent them in this agentic web, and some of them will be on Web 3 rails, some of them will be on Web 2 rails. And so having like really a large number of agents is very imaginable, even this year.
Yeah, totally agree with the second view. It's not as contrarian, right? I think everyone here is building towards that.
Yeah, I think for the future of Web3 AI, I think we need more utility of so AI will become more utility existing there. So currently, a lot of agents and AI built in the Web3 are just have very limited utility, like only the social ones, the chatting ones, and also with the mimic coin. But in the future, I think we will need a lot of more advanced AI and agent that can have a functionality to fulfill more stuff for the human daily life. And especially, I think the evolution, the next trend of the crypto industry would be for example, the RWA stuff. So like a lot of real assets in the world will be on board in the decentralized world. So in that case, actually, I would envision also, for example, the science and the decentralized science stuff. And in all these fields, actually, we really need more functional AI and agents existing there. And another thing I think would happen is that there could be a lot of interactions between the agents and also humans with the agents will happen on chain. And so that the decentralized environment can become a society for the agents. And also the agents will become more self-evolutionary, so that the agent can learn, can grow their intelligence through the communication with other agents and humans. And also, I do believe that this will be a appropriate way to approach the final, the ultimate AGI stuff. And yeah.
Cool. I mean, some of the points have been made already, but I think a key one that we haven't talked about yet is the importance of privacy. So I will go as far as saying that decentralized AI without privacy is actually worse than centralized AI. The reason being that the trust assumptions you have to have in place are actually strictly worse, right? Like the one option is trusting OpenAI with all your data, and the other option is entrusting a random node operator sitting somewhere in the basement with all the data, right? I would say that the latter is worse. So the industry will acknowledge and I think adopt private inference blind computation, both from a storage perspective as well as from a compute perspective as the standard. And that is relevant from multiple layers of the stack, right? So that is relevant for inference. So whenever you actually run a model, whenever you send data to an AI model, as of today, you have to entrust that party running that model with all your sensitive data. But blind computation, we're building a neural network, is enabling you to run these models without having to entrust that third party, right? Because your data is always encrypted for the entire life cycle. I think the combination of things happening on the edge, obviously that's a big focus for OpenAI, and happening in the cloud without at any point in time leaking anything about the information is extremely exciting, and I think will achieve more mainstream adoption beyond Apple Intelligence. Apple Intelligence has made the first step in a similar architecture, and I think we'll see something similar both across crypto as well as non-crypto architectural designs. So that's it on the inference side, and likewise I think on the training side, Ilya made the comment last December that he thinks we're running out of data essentially, right? Now you could agree with that or not agree with that. I think like ultimately we're running out of high quality data, or at least the speed with which we're generating valuable high value data is diminishing. And we need to find other data sources that we can tap into to generate the next generation of models. Part of that obviously is synthetic data, but again, that derives from public data. What's really exciting is to think about the future where we can tap into private data, right? My data, our data collectively that's currently not utilized, that sits on the edge, both from a user perspective as well as from an enterprise perspective, and utilizing this information to generate the next level of intelligence. So I think privacy in terms of training, but also in terms of inference, will be a critical component in this year and will find huge adoption.
Yeah, I'll take the last one. So my name is Ben Wu. I'm the co-founder of OpenAI. I think so the current kind of agent, AI agent Meta, it's kind of agent-centric, meaning there is like no human attention that is paying to those agents. This is like a big missing piece for the previous kind of agent cycle. What we see in the future is like we need to build the personal AI, which is attention amplifier for the agent. So like without a real human's attention paying to those agents, because like real human attention is so precious, and every like Twitter, like TikTok, everything is competing for real human attention. But imagine like we can build a personal AI, knows about all your context data, knows about your preferences, and can kind of close the loop with the agent. And so this will help those agents evolve and become better. So like what OpenAI is doing is like on the edge device, you plug in all the data from like your Web2 crypto, like currently we have 10 data connectors, build your personal AI, and then like all the agent can interact with the personal AI. And also by doing that, like the agent can have like earnings, have like fundamentals of our like ecosystem platform token. Yeah, so like that solves the agent fundamental kind of problems. I think that this is what we see will be different in this year.
Yeah, it's a great answer. I guess this can bring us to the next question. Yeah, actually, I was a Stanford PhD, and back then, Feifei Li set up this institute called Edge AI, right? Human like AI center. So the thesis is like AI is being controlled by big like attacks, which we all don't like as blockchain people, but it's also need to be human centric, which is kind of not super aligned with what's the typical kind of blockchain spirit. Right? Typical blockchain spirit is more like everything code is law. It's actually an environment set more for machine than for human. So how do you guys think about this human-centric view, right? At OpenAI, we think more like we build AI that belong to a specific human, that it's like that human's most loyal personal assistant, and eventually maybe they're like life partners. But I would love to hear every different founder, what's your view on like what's the relation between kind of this carbon intelligence human beings which will die but are still today smarter than AI in some aspect, and the silicon intelligence, which is like more uniform, very powerful, very rigid.
Yeah, I'm going to jump in quickly. I also have to leave early. Sorry for that. But I think it's a really broad and interesting question. So one way I would take it is like, to the extent that we're talking about agents, we are agents, and then there's software agents, and software agents use our form of AI, and inside they use AI models. And to the degree that we're talking about agents in any societal context, be it like human society or software agent societies and any crossover, an agent isn't just intelligence, it's also preferences, resources, and then the action it takes. So by definition, you have diversity, heterogeneity, and I think that's actually one of the promising sort of macro forces for a more decentralized AI future. Because if you think about how the economy works, it's a bunch of agents, businesses, humans, interacting, and they're using their resources, they're using their different private knowledge and the different levels of intelligence to compete. And importantly, we often have relatively similar starting conditions in terms of intelligence, but the comparative advantage forces us into high specialization. And so I think at least when it comes to the agents part of AI, we'll see like very high diversity. And the question is, can that by centralized approach or centralized approach? I mean, you could imagine a closed AI approach where everyone has some sort of privately fine-tuned instance of their agents that represents them. But maybe we end up more in this really open space where we all have really heterogeneous agent architectures which we utilize to compete in this large agentic web.
So we want to take a different approach. I think larger language models are the ones who like don't think about human-centric, right? Because it's majorly trained on like internet data. But I don't think we need to compete with these larger language, tech giants and all that. Because if we do that, we don't have the money for it. We don't have the time and the compute power to do that. The best way to actually is to take a larger language model and see how we can kind of fine-tune it for our own need. That's what we do with OpenEdge, right? We enable people to bring their own data sets. It could be a subject matter expert, or it could be a business that owns high quality proprietary data, which they can bring on board, contribute to OpenEdge, and have that be used to build models. Either they can build their own specialized models, or they can contribute for others to use these models and build, and contribute others for them to use these models and have their own version of specialized model, right? I think that's how you kind of like use AI for yourself. You've seen this happen with the traditional space. When internet happened, internet was centralized. Then we had HTTPS, which is open source, which enabled World Wide Web to happen. That's what enabled apps to come in. That's what enabled web apps to be there and on the internet. So I don't think we need to go and worry about what's happening with the larger language models. We need to figure out ways where we can use them and make it customized and human-centric for ourselves. So that's what I believe, and we need to make sure that we also have incentive mechanisms that enable for this to happen, because this has to be like a flywheel, right? This has to enable people to contribute data, build the models, and make sure the models use, and then if the model gets used, the data contributors get paid for it. So that cyclic economy has to happen, and that's where we use attribution to showcase that if your data was used, you get paid for it. That's a protocol. I think anyone can use that as well. You want to give it out. So that's the best way that we can use Web3 primitives, democracy, to go against all these large language models and the companies behind that. Figure out our own ways to be human centric.
Yeah. So I think so in the decentralized situation, I think although there are a lot of agents that can be autonomous, but we do believe that agent itself can be very valuable, and so it can also have the ownership to the users. So that I think in the decentralized world, there could be some personal agent and AI intelligence that belongs to some can serve some specific people. And so this what we are doing that we actually want to assign the agent some ownership mechanism so that we design a new NFT protocol, so NFT standard, so that we can combine the agent with its owner and also its intelligence behind. And the interaction between the human and the human owner of its agent, and this agent can actually get more personal context and can improve its knowledge. It's specific to some context, some scenarios, and then with this NFT, actually we enable the transfer of the agent to others, so that the agent capability can be forked by to another agent, and then this agent can diverge to the different context scenarios. And I think this would be a valuable scenario, that how human maintains its own personal agent and also interact with the agent with other agent and humans. And of course, the purely autonomous agents still have values, and but they can have the different properties and will coexist in the ecosystem, I think.
Yeah, I think we will see personalized agents and then at the same time specialized agents. Personalized agents being there for you, having access to your personal information, and essentially making you more productive, making you more efficient, and doing things for you that you don't want to do yourself, right? And then next to that, we will have specialized agents being those that have been trained on potentially valuable information that you may possess, and you want to enable your agent to serve other agents and other humans in an agent economy, and make it accessible for people to utilize these tools. So I think we see those two. Ultimately, my strong take is that obviously agents should serve us, not the other way around. And to make sure that that's the case, I think there need to be checks and balances in place. I think we're not quite there yet from a foundational model perspective to have truly autonomous agents that can go out there and do everything for you, because I think we're still lacking the accuracy and foundational architecture to do that. But we have to make sure that there are checks and balances in place today, and also obviously in the future as models improve, as these models develop stronger levels of reasoning. We have seen great improvements this year last year with reinforcement learning. As that enhances and agents develop a stronger level of critical thinking and reasoning, it will be even more important to have the right policies, the right checks and balances in place to make sure that these tools serve us, but not the other way around, right? But to summarize, I think we'll see personalized agents and specialized agents, utility agents. As of today, what we have seen is mostly social agents around Twitter curls, but I think we are slowly but surely getting to a stage where these agents are actually creating real utility and make our life better, and that's very exciting to look forward to.
Yeah, so recently, like UC Berkeley published kind of a research. Basically, it's running a 7 billion model, small model, basically like coordinate all the large language models in the cloud. So that's like what we see, how personalized kind of AI work together with all those agents. So like the external agent are like living in the cloud, powerful with strong reasoning, access to all the information. But the personal AI is about trust, privacy, and full access to users' contextual data. And so this kind of is the philosophy of how we see kind of the personal AI, which is like a small and full context data, while like the external agent is like a powerful, strong reasoning and full access to the entire internet. So that's exactly what we're building right now.
Is we all get criticized as actually like AI crypto founder. Like, do you just launch this project so that you can have a coin to replace your IPO, right? That's a kind of like a pretty common thing. And over the last 2 cycles, I count cycles a bit fast, right? Like over the last 1.5 year of like a moderately bull market, a lot of AI meme coins and even like major projects, the coin actually, if you take the coin away and just replace it with dollar incentive, it probably still works. Plus, if the company just IPO and give their user stocks, So where do you see as a place where your AI system or like some other startup or some other protocols design that intrinsically have to have the token, otherwise the whole thing fall apart? Let me give a counter example. Like I would consider all the decentralized compute. You can totally subsidize everything with AWS, and there are Web2 company Rampart that can do right, the Uber like renting model of compute. So I consider that a counter example of my question. So I have a very high bar. So let's try this challenge.
Yeah, I think that's one of the biggest challenges of crypto, right? That's a boon and the negative aspect of crypto. A lot of people, once they launch their token, kind of like don't really care after that. We've seen this because that's how crypto kind of like got attention, right? During the ICO period, I've been in the industry from 2017. Most of the projects that did ICO, and once they launched their token, never like really did it. About 90% of them were scams. Some of them were good. That's what BNB, Ethereum, Solana, and all that came about. I think this is there in every industry. We used to see this during the initial early years of IPO as well. Any company used to go IPO. I pretty much see that's what is happening in this street. Now, I believe from 2017, we've gone much more mature. The retail understands how technology works. They want to see a working product. They want to see the team. They want to analyze if something useful comes out of this project and then buy the token. So those are good measures. You could definitely use USDT to kind of replace your incentive programs. But the only thing is that you won't be able to form sort of like a cyclic economy, right? USDT is just replacing dollar that is there, but you won't be able to have this kind of like upside for the token holders, which is the actual incentive for them to participate. Because if you provide USDT, it's like very similar to other traditional space incentives, which doesn't excite them. I think that's one aspect of crypto which pulls the power, which pulls people to come forward and contribute something. So that incentive mechanism has to be there. We need to have a token which can have an upside later on if the project does really well. And obviously governance and all that is driven on the project. So if I need ownership in this project, if I think this project should do well, I need to govern this project. I need to own the actual token, not USDT. So these are the elements that is there. I don't think the problem is with using the token. It's problem with the mindset of the people who drive the project. If they have the right mindset, then I think there is no scam out there. So it all comes down to the founders and the team that is being building the protocol.
I think it's a question about the utility of the tokens, right? So basically, I think my personal opinion is that I think the token should be there with true value to incentivize the decentralized participants. So because, first of all, I think when we talk about the decentralized AI, we are talking about some weakness of the centralized AI, like we don't have enough transparency. So for example, if we use the open AI service and we don't know how their data, but how they use their data and how they train their model and what's the objective function that model is trained. And so I have a lot of examples that that centralized AI can do some evil things to human. So that's why we want to have the AI part in the decentralized environment, so that we can track all the stages that in the entire cycle of the AI pipeline, from the data ingestion, data labeling, and also the model training and inference. But so then in the decentralized situation, we have to use the blockchain technology combined with some verification mechanism to guarantee the trustless of all the storage and the data and the computation values. And the only way that the blockchain can manage those kind of resources to use the token. So I think this is where the token is necessary for provide the value of all the system. Yeah, so for example, in 0G, actually we are building a decentralized storage, and we have a protocol that verifies the data really stored in a specific storage node. This verification needs to be happened on the blockchain, so that it only has to use the token zero-G token to incentivize all this storage node. And the compute network also the similar thing. I think, yeah, that's my point. Yeah.
Yeah, I mean, I think my take is that most agents, certainly as of today, don't need a token, and likewise, personalized agents that tap into your personal information on the edge and using blind computation don't need a token because they serve you, and if all they do is serving you, I don't see a reason why you need a token. But I think there are absolutely scenarios where a token makes sense. So a few of the points have been mentioned. If you have a scenario where you're essentially training a model in a crowdsourced environment where multiple individuals contribute their data to sort of train a global collective social intelligent model, there needs to be value being distributed back to those users that have contributed to that information, and likewise have a token that encapsulates the value accrual, right? That's the upside that was mentioned before that I think you need to have here to set the right economic incentives for people to actually participate in that. And the second thing is, even if there's no crowdsourced training, if you have valuable information, specialized information, confidential information, and you think you can utilize that to fine-tune a model that can become a very powerful specialized agent, and you want to enable other agents and humans to access that agent, again, ideally you have value accrual, right? That encapsulates all that information that you provided. So if you offer your agent to provide services to others, and instead of just getting paid, people can bet on the utility that the agent generates and creates for other participants in the market. So my short take on this is that I think as of today, most of the stuff we see doesn't need a token. Personalized agents don't need a token, but specialized and crowdsourced models that sort of generate these agents coming from collective intelligence, they ideally have these tokens because tokens are powerful tools to set the right incentives, value accrual, and also to bootstrap information that needs to be provided.
Yeah, so our consideration for token is number one, decentralized ownership. So the entire kind of like Web2 big tech is growing on billions of users' data. And when we talk about personal AI, it's actually like take back ownership of the data. So basically, decentralized ownership is the way to bootstrap the network. This is number one. And number two is like decentralized security. So basically, all the agents are permissionless to register on the chain. And the decentralized security means like the agent operator needed to stake a kind of network token in order to provide the services to the network. So like if there are any like malicious behavior, they will get slashed for the services they provided. And the third thing is like kind of incentive for the agent personal AI interaction. So because like the fundamental kind of ecosystem growth is to really foster the personal AI and the agent matching. So that's also like a network token plays a strong role here.
Yeah, I think it's very interesting that it seems the biggest topic that people use is still upside and incentive, right? So, and slowly, I feel like in the next 2 years, as we dive into like real agents, not just like meme agents or like a chatbot that's like a character AI, but actually a AI with a job that can solve things from A to Z, like maybe the OpenAI operator level AI. At some point, maybe they will start to have their own identity and own like they should have money. And eventually, like Ilya is talking about, I mean, the OpenAI co-founder Ilya is talking about ASI, right? Artificial superintelligence, which one big definition is like self-conscious. They basically have their own will, and I can kind of see there is a middle ground where it's not evil to kill all the human, but it's getting to want to make more money for this all machine wallet. Feel like that's when we can kind of go beyond having human participants having more upside and incentive. That's probably like my bet of the next stage. Yeah. Yeah, thanks for everyone. And this is a great panel.
Thank you.
Yeah, thanks for everyone.
Thank you guys.
Yeah.
Thank you.
Thank you.
Is it? I think you're next, right? Yeah, cool. Yes. Cool. All right, guys, let's move on to our next keynote, and we're going to keep Bill up here on the stage, and he's going to be talking to us about Pin AI. Now, I didn't know too much about Pin AI to begin with, so I just went out the back and I spoke with your AI engineer, and he gave me a very good, quick and easy TLDR. So the Pin AI, essentially what it is it's a LLM that's highly specialized to yourself. So it's essentially just a digital replica of yourself. It'll be able to connect to your socials, your calendar, help you, I don't know, cook your dinner or whatever you do, whatever you want. So you're going to be able to train these LLMs on your data, so it will retain that memory, and then you can use that to just make your life easier. So we've got Bill here to get into the details and tell us a little bit more about that, because I'm sure he's the expert.
Yeah, I'll continue the conversation, but this time introduce what we are trying to build in Pin AI. So what we are doing is to build an open platform for personal AI. Basically, give everyone their own AI that knows them the best and is their most loyal kind of a personal assistant. Imagine if you are like a king, an emperor in the old days. You have a bunch of people surrounded you, and their whole life is about like learning your preference and do things that really suit you. In modern days, if you are a CEO, if you are a really rich billionaire, you have people that are surround you as like your executive assistant or like your personal assistant. Or in some rich billionaire, they have the boss of their family office, right? All these people exist to service the billionaire, the CEO, the emperor. And what we are doing is basically building that personal assistant, executive assistant for everyone. Let every normal people to have an AI that is that like dream your personal assistant that like really care about you and do things for you without you even spending your attention asking. And it will find the most relevant things for you without you even like kind of needing to go there and tell it a whole very long prompt. This is my personal information. This is my preference. This is what I wanted to be done. In today, when you interact with very smart like AI models with say ChatGPT, like deep research with O3 or use the operator, you all have to do this like extremely long prompting. And when you do deep research, it will say, hey, I want to buy a ski. It will ask you what's your height, what's your weight, what's your budget range, and what's your skill level. All these questions shouldn't be answered by the user, right? It should be all answered by a personal AI that can look at your data and based on all your raw data, come up with the most relevant context information for the most capable AI that is doing deep research for you to take. So there is like this context interaction between your personal AI and the external agent. So this is kind of a easy introduction to the AI part of what we are building. And this is a team. So I'm Bill. I was one of the co-founder of Pin AI, and yeah, previously I was a Stanford Math and AI PhD. I was the first AI PhD that at that time actually there is no such thing as AI PhD. I was like a math PhD 2014, and I'm like the first math PhD that go all in deep learning. And in 2016, I'm the person that actually the first one who discovered that the self-attention, which is now called transformer model, is gonna work on question answering. I basically take the newly discovered machine translation SOTA model like this, like replacing all the LSTM and use everything with attention, like to question answering, and get also a SOTA result on question answering. And later in 2017, Google Brain had a bigger like push to make that model in production, and it's called attention is all you need in paper, and called the transformer as we know today. And that is the start of, I consider, the more like modern NLP driven modern AI. And our team is also very strong. We have David from Ethereum core research and leading the robust incentive, previously founder of Lyft driver marketplace and Columbia PhD, and Ben, who was over there sharing his vision. He was doing personal AI and sold the company to Baidu from YC with basically the Baidu speaker becoming the #1 AI speaker in the world, even beating Amazon's Alexa. And we also have Regan, who is a engineer manager at Didi before that managed a 100 people team and have been CMU, like very strong engineering talents. And we have an awesome team. So for the sake of time, I'll skip all the team. But like we have people that kind of have been in 3 like AI unicorns and have already like been like major exits, but still want to really join us in the mission. And also we have people that used to work in like Apple Intelligence and now joining us from the dark side of like Apple's big corporate machine learning that is building a closed walled garden of AI, but now turning to the open end of it. And we have a bunch of great investors like Andreessen Crypto, Hack VC, a bunch of like top founders like Lili Liu, Evan, Sandeep, Ilya. I'll just quickly go over it. So personal AI, we have already talked about it, so I'll skip all this introduction of like why big tech cannot win. So fundamentally, it's like they can only have the data from their own. They cannot have other people's data. And what we are building is a personal AI on user side, where user aggregate all of their personal data from their shopping behavior to their like Web3 wallet behavior to their stock trading behavior to their like gaming habits to your like last night how many girls have you like flirted on Tinder and how many respond to you, right? Like a very wide range of different data, and we are gonna build the most versatile personal AI that understands you in multi-round. Basically, is that the most trusted shadow executive assistant that not only go with you in work, but also go with you in your like personal life, your like entertainment life, and probably manage your money as your head of family office eventually. And the model is going to be deployed locally on each user's data so that there is no privacy concern. And we also have a big component that is runs in trusted execution environment, TEE node. And this personal AI will have all the user-specific context model so that it can essentially try to generate intent. I'll give you a concrete example. So if like your friend is having birthday, instead of you need to check your calendar and find your friend in birthday and tell your shopping agent, hey, my friend really likes something and buy him something. Your personal AI should be like, hey, your friend is having a birthday and he told me he really loves this LeBron James shoe, and then talk to your friend's personal AI to get his shoe size, and then come back and basically recommend to a boss, hey boss, this is, I have already let 10 different shopping agents compete for LeBron James shoe. And some of them don't have a shoe size 10, some of them have, and I choose the one that is the cheapest and the fastest in delivery. And do you want to buy it? And you just need to say yes. And then the transaction is done. And eventually, when you have enough trust to your personal AI, you can give your personal AI a meta instruction. For all my friends who are having birthday, if you are buying any gift that are less than $200, you do not even need to ask me so that I can save my attention budget and just let the personal AI decide and send out the gift. That's how a real billionaire live, right? If you have like 5 different lovers and you need to memorize all of their like birthday and send flowers. So basically all the billionaires have their assistant doing it. So that's the world where every single normal human beings are working into, right? Yeah, and what we are building is also an open platform where we are building the part about personalization, and we are actually calling for all the developers here to participate and build the other side, which is agents with different jobs. For example, the expert shopping agent, the expert trip planning agent, the expert trading agent. And so far, we have used that philosophy to build a high-ping mini app. It's a Telegram mini app. And by today, I think we have close to 2.6 million users. And you can see on the chart, it's a very sharp exponential growth with very strong global distribution. And yeah, we have a lot of users connect different type of data. And also, we have probably like close to 23 million usage on our highest used crypto news, trading news agent. And also we have probably like 17 million usage on the Amazon shopping agent. And here is the architecture. So basically, how we build our personal AI is we start with a data connector that pull data from different platforms, and then we have a basically perplexity style search plus RAG plus retrieval pipeline that can essentially index all the personal data, like how Google index every single website. We index every single consumer user's personal data and mix them in a way that your AI can know everything about you. And through there, we have this AI that are completely powered by your own personal data, so it's the most private and knows you the most. Now, when you have an intent, for example, when you want to buy like a gift for a wife, or when you don't have an intent, so that your personal AI discover that your friend is having birthday and need to buy a birthday gift. In both scenarios, we have this pin chain that is basically doing intent matching, basically like matching your needs to buy this say birthday gift of LeBron James shoe with a bunch of different shopping agents that are providing service, and they will compete on who gets the fastest delivery, who has the lowest discount and all that. We are having a bunch of real world integration with utility agents like your food delivery agents, your crypto trading agent in like a centralized exchange, and also your meme coin trading agent that help you pick like the favorite meme coin that your friends send you in private social chat groups. Yeah, and we have already onboarded a lot of different applications, and in the future, as in previous channel, we have the agentic web. Right now, there are just happening of like some agents that can solve problem for you and just talk with you as a co-pilot. I think this is only happening kind of end of last year, like AI is getting reasoning capability and getting smart enough to do all these basic things. And I think this year we'll see explosion of a lot of different agent applications. Yeah, next week we're actually having a big hackathon in Silicon Valley with Robinhood CTO to like get people to build a different type of agents that actually can have like deep integration in some of the hardcore fields. For example, how to trade more effectively, to trade your stocks, buy your options, and potentially also like do shopping, do food delivery. Yeah, and I'll skip a bit more. And yeah, like thanks so much, everyone. I think one last thing I want to say is what we are building, you can have a simple mind model where like Perplexity or ChatGPT, they are building this active answer machine, right? You ask question to it, and it basically give you the best answer and synthesis all the things on internet. Essentially, it's replacing the business of Google, right? Like it's attacking the old social search engine business. And with what we are doing is fundamentally challenging the business of like Meta as the personal recommendation business. So we want to build the most kind of know you the most type of AI that can do the most personal recommendation. So without you even spending time to use your attention to ask a question, we can proactively give you recommendation and solve problem for you as if you hire a really high quality executive assistant. Yeah, thanks so much.
Scott, right? Yes. All right, thank you very much for that, Sunny. And looking forward to it being available on the App Store. So for our next keynote speaker, we have co-founder and CTO of Kite, Scott, and Kite AI is a purpose-built L1 for AI. So he will take it away and give us all of the details around that. Do you need?
I need a slide. Okay, great. Hi, everyone. My name is Scott. I'm co-founder and CTO of Kite AI. Maybe a little bit about myself. This is actually my second company. I founded a streaming DB company 4 years ago. We got 45 million investment. Before that, I was building foundational data infra at Uber. So I grew a team from myself to 200 full-time employee. And before that, I was founding engineer at Salesforce. I installed AI cloud. In this case, I spent the last 15 years building foundational data and AI infrastructure. My co-founder, she got her AI PhD from Berkeley. She was leading product management at Databricks, and she was also a founding engineer at Data, one of the biggest large ultra-ML company. We also have Yuski, one of the previous co-founder of Data, joining us leading the AI development. From business side, we have Lei and Vic, previously lead Hydro BD and Hydro ecosystem from Near, joining us lead the Hydro BD and Hydro ecosystem. So what is Kite AI? Kite AI is want to solve the biggest challenge for AI. Currently, what we observe, the biggest challenge for AI is that the AI performance model is actually lack and it's not reach production grade. If you're asking why DoorDash not integrate, Uber not integrate with AI model, because you still have a lot of model hallucination in this case, not being able to reach a grade. This is actually the outcome. The reason is actually underlying, there is a more underlying reason. From what we see, one of the underlying reason is that first is the lack of transparency. For example, if you're asking Apple if they can use OpenAI or use DeepSeek, they cannot. The reason is that they don't know what's underlying this model. What data is actually using the model. Because even if you have 1 million data points actually work perfectly, you just need one data point to data poison the model and give you disaster result in this case. So lack of transparency is one of the fundamental reasons preventing the enterprise, government, military use any of the open source model. Second is that lack of incentive. OpenAI actually profit billions of dollars. I think that this year, it's probably going to reach $4 billion to $5 billion revenue, but it's crowd-based on the whole internet. All these data provider actually didn't profit anything from it. That's why you see this chart. This is forecasting by the end of this year. Roughly more than 1/3 or close to half of the previous public data now will become private again. In this case, it's actually legally prohibited for you to crawl. In this case, we're going to have less and less data, public data to train the model. In the model performance will become degraded even further. So that's what Kite AI is for. I think from the right-hand side, we were building a data and AI infra to mark the end-to-end transparency. For example, you have a model. In this case, it could be a digital twin model. Where is the model coming from? What's the data behind the model? Who is contributing to the model? Who is a builder for the model? End-to-end transparency. And then from left-hand side, we want to make sure incentivize the model builder, AI contributor in a right way. If you're looking at it today, Ethereum is giving $4 billion to 1 million validator, and 1 million validator doing exactly the same thing. How about just redirect 90% of this rewards, blockchain rewards, to the AI contributor? In this case, that's actually our proof of attributed intelligence. In order to do this, we customize it almost like every single modular level of the blockchain. First is that we actually make AI compute a first-class citizen. And also, we also modify the consensus layer to add proof of attributed intelligence on this part to make sure distribute the rewards to the real AI contributor. How does it look if you look at all the current existing blockchain is built on top of transaction? The transaction you're going to have from to how much money you pay in this case. But if you look at the AI compute, it's more like who is the owner for this, who is a pair for this, who's going to receive money, what's a payload for the what's the payload for the request and response. The payload and request for response can be huge. With a long context, some of the request response can be as huge as a 500-page book in this case. So on top of this, because we pack this AI compute together on block level, in this case, we will make sure the AI compute, AI volume is actually tracked even in the light node in this case. So the block consensus can calculate in the light node who is actually contribute to it, how much reward we should give it distribution to. So this proof of AI cannot just build on top of blockchain. Blockchain is very limited in terms of compute and storage. So that's why we complemented with AI and data infra. This is actually our strength, AI and data infra. And then in this case, attribution and then attribution going to be calculated off chain on the AI and the data infra. So that's our focus. We are building an AR1. So our focus is on proof AI, basically just to give rewards to the AI contributor. Then it's all about ecosystem. Currently, we are onboarding all the agent subnet, data subnet. We have the top data set. We have top agent subnet from Near joining us. We have Near from BT. We have top agent subnet from BitTensor, BitMind joining us, and we'll have more more top data set, data and AI subnet joining us from different networks. We currently have 10 to 15 to already join. We're going to announce over the next few weeks. We believe that a subnet is actually the necessary step to encourage open collaboration. For example, this is one of the use case we built, basically Berkeley built on top of us. Berkeley is building a blood cancer detection model. Currently, they only have data from UCSF. They get the data from UCSF. This is blood cancer. This is like huge image data, 200K times 200K. Each image model, each image data is roughly 2 gigabytes to 4 gigabytes. So they currently, because they only have data from UCSF, the model they build, they say, hey, I cannot verify this model. I don't know what's I have limited data. They want to find some data subnet provided audited data from elsewhere in this case. Luckily, we do have a Codata. They work with Shanghai Renji Hospital. They provide tons of this audited labeled blood cancer data. So in this case, now Berkeley not only was able to find a data subnet, provide them with additional data, they can also work on, use our data infra and AI infra. Think about this, like a 4 gigabytes file, you have thousands of them, you need to truncate to a smaller portion and then train the model. It's actually non-trivial in this case. That's why majority of the model trainer actually spend a lot of time just deal with data and AI infra. And then, Kite AI is powered by Datablock Lab. We build the data and AI infra, empower all the story. So for example, the story protocol, EigenLayer 3, OpenSea built on top of that data infra, in this case, data and AI infra. Yeah, so this is an overview of the product, and then basically, data and infra, you actually can write SQL to build a model on top of it. Because we have subnet, so different AI builder can just select the subnet related to them. We have a few other use cases, for example, creator digital twin. In this case, they need tons of the audio and video data to create a creator digital twin. But basically, we have a selection of data subnet provide additional, private data you can use and then build a state-of-art model. So we launched on February 6th, we launched our first testnet. We actually got a tremendous growth. It actually surprised us by a lot. We got more than 2 million wallets connected. We currently have, this is actually a little bit out of date. We currently have 120 million inference in less than 3 weeks. Every single day, I think now we have 20 million inference. This is actually surprised us by a lot. But yeah, so if you're looking for, if you want to join us, if you're building an agent, if you're building a model or data, contact us and join us as an agent subnet. That's all my sharing. Thank you.
Is it finished? Yes. Oh, shit. What is the next one? What panel is it? Collaborative open AI. Alrighty, I think we're moving on to panel number 3 for the day. What a great event. Been out the back networking with people. There's people from founders, exchanges, everything, different blockchains out there. So it really goes to show that the AiFi space is a good place for builders to come and help contribute to this whole entire ecosystem. So the next panel that we've got going up is going to be AI blockchain innovation for a collaborative and open environment. Can we please welcome to the stage our moderator, June from Hashed. We've got Scott from Kite. That was a very good warm welcome. You've got some fans in the room by the sounds of it. Jillian from Hetu, Stefan from Cave, and Victor from Ormi Labs, and Audie from W3IO.
Wow, this is a huge panel. I've never done with 6 panelists at the same time. Usually it's 3 or 4. So I'll keep it very efficient and compact. So just to introduce myself, I'm June. I'm a senior investor at Hash. I've been leading all the AI and consumer tech investments. Besides incubating Story Protocol, I invested into also BitTensor, Archive AI, and the likes. And I wanted to, before we make an introduction, give everyone the same question today, because in this traditional AI market, closed source software developers, centralized AI organizations are building everything internally from data training till data inferencing and model training, and also model inferencing to deployment. And everything is black box. So any stakeholders who contribute to the data side or model side, pro rata revenue is not shared. So I want to start from Kite AI to explain about, Scott, yourself and how you're trying to resolve this through, one, the value of decentralization, and second, token-based incentivization. And we'll go through this row.
Sounds good. I just give an intro, like 10 minutes. I'll probably skip the intro.
Yeah, we can
part.
skip the intro. Yeah.
Yeah. So I think it's almost like an open secret. In the industry, OpenAI, XAI, all the newer AI startup just crowd the data, ignore the license. The only company actually respects the license is DeepMind and Apple. They actually spend 10x engineering and 10x the cost to make sure respect license. Think about this. Google DeepMind need to retrain the model like every 6 months. They need to make sure maintain every single life cycle data. If the license expired 2 months later, they need to reacquire license in this case. It's tons of data in this case, and think about the GPT-4 trained on top of $13 trillion tokens data. You need to manage all this. It's going to be 10x the cost, 10x the engineering effort. And because OpenAI and supporting all the startup actually ignore these rules, you observe a trend. Previously, all the company actually makes it like nothing. My most valuable asset free to this Gen AI company, crowd and then profit billions of dollars from it. So that's why, from TiTouch last year sharing, at the end of this year, probably half the previously public data will become private or actually illegal to crowd in this case. So that's an important issue. The whole AI economic is broken. With less and less data, the model privacy will become worse and worse in this case. So that's why the Kite AI is come here beautiful. We want to make sure everyone can contribute the data and the model builder can get the data at a fair price in this case. And basically the most important thing is the data part. You saw what DeepSeek doing in this case, right? So which is based on open source available data, and then they can train a state-of-art model, because currently there is really not much thing to tune. You just need to pre-training based on tons of data. GPT-4 is 13 trillion tokens of data. This can be fit into one laptop. It's not a lot of data. And then you just do a lot of reinforced learning. You can get very best result. So the most important thing is the data asset. If there is no one actually fixed economic, in this case, we're going to have less and less data to train, and then that's the whole economic is broken in this case. So that's why what Kite AI come here to make sure solve the issue, make sure data contributor economic is fixed in this case.
Got it. Yeah, data is the key growth engine for decentralized AI. And I'll ask more detailed questions on data to Akav and Ormin Labs. But before that, we want to go through Sentient. So if you could give an intro about yourself, Sentient, and how you guys are resolving the centralized issues. Yep.
Yes. So I'm subbing for Himanshu. My name is Antonio.
Yep,
I lead
younger version of Himanshu is right here. So yeah.
I'm leading business development at Sentient. And I think our approach is we're focused on models. Our core products are going to be these community-owned, community-built, and community-aligned models. And the sort of the crux of the problem that we're trying to solve is how do you make open source models truly monetizable? It's almost like two mutually exclusive terms. And it seems to me that the only way that you can actually maintain this open source nature of collaboration is to keep the weights themselves open. And to assure monetization, you need some sort of strong alignment to a financial contract. So we're looking into ways to embed loyalty into the model weights themselves, such that I can, as a builder, I can publish a model. And then you as app builders, you have access to the weights, you can run this model locally, you can fine tune it, but the model isn't going to respond to you unless it gets some sort of a secret key, a permission from me as a model owner. And then every query has to be routed through Sentient, and we can provide these ownership right guarantees. These models become revenue generating assets. They can be tokenized, and ownership can be distributed based on contributions. And now, I think this is the sort of this powerful aspect of blockchain and token. You can construct very sophisticated incentive systems to direct millions of developers around the world towards building a family of models that are hopefully more performant than anything closed company can make. And that's historically open source has dominated in other domains, like take operating systems, for example. Windows had a lead for maybe a decade, but Linux now owns more than 80% of market share. And this is without any sort of incentive system. It's just people wanting to push open source forward. So yeah, I think our thesis is that this road to AGI needs to become progressively more decentralized through distributing rewards and ownership of these models based on contributions. And then the second aspect is, can you provide a way for communities to build models that are aligned with their own sort of granular set of values?
Got it. Yeah, I think what you were talking about was the crux of Sentient, which is OML, which stands for Open Monetizable Level AI, which I'll go delve into it deeper in the next questions. But before that, Jalen, if you could give an intro about H2 and how you're resolving the same issues as these two other guys, that would be helpful.
All right. Hi, I'm Jalin. I'm a co-founder of H2 Protocol. So H2 is a decentralized infrastructure that is the goal is to like co-build powerful AI models, particularly for the DeSci scenarios, like for scientists. I agree with the previous panelists, right? So having open access, right? So transparency and open is key to decentralization. One of the interesting angles we are looking at is so these AI models, they do not come in isolation, right? So these AI models, there's a long chain of these dependencies on previous innovations in AI, in ML, in other type of techniques, right? So we should be able to recognize all these causal dependencies when how you're actually be able to generate this model, so that we don't necessarily only reward for example, a particular model that works well in, for example, biomedical scenarios, but we also need to recognize the contribution from previous contributors and models, right? So we essentially build this what we call a causal graph that keep track of these causal dependencies of model evolvement, evolution, and be able to do all the contributions accordingly. I think with that, I think that's a more healthy model that will, in general, will incentivize people to make more impactful contribution to the growth or the innovation in AI.
Yep. So TLDR is that E2 is basically allowing for verifiability of off-chain events and procedures, which constitutes like majority of the data processing procedure as well. So now I'll try to speak up more. I think everybody has been speaking a little on a low volume. So starting from Stefan, if everybody could speak up a little so that everyone can hear us, that would be helpful. Yeah.
All right. Can you hear me? Okay, cool. So I'm Stefan, CEO of Agave. Agave is like a unified data layer. Our goal is to help customers, businesses to bring off-chain data sets on-chain. Currently today, definitely in traditional workloads, but also in deepen or even in AI workloads, most of the data is stored in the cloud. Still a lot of Web3 builders are building in the cloud. And so what we're doing is we're helping to bring these off-chain data sets that are stored in the cloud on-chain so that, one, you get the benefits of blockchain, meaning verifiability, immutability, and you can actually reduce your cost by using a network of storage providers that are tokenized and incentivized to contribute to this network by 80%. So users that want to reduce their costs can easily move over to Agave. And Agave also provides a very simple object interface and also has S3 compatibility, which allows users to easily connect their Web2 applications, which typically manage those data sets and bring those on-chain. So we're using the token to incentivize lower cost and also to bring more service providers online that will bring the integrations between, the Kite AIs of the world and other stacks, and actually allow them to eventually actually take advantage of the programmability, the smart contracts, because you have now your off-chain data linked on-chain as well.
Yes, Victor.
Hi. Hello? Is it on? Okay. Hi, my name is Victor. First of all, let me do a bit of intro about my background. So I graduated from Cornell, right? Back in 2015, Professor Mungunser, who's known as the founder of Avalanche, was my professor. I did Bitcoin layer 2 research with him back in 2014. And later on, went into computer systems labs at Cornell, did a FPGA-based, ML accelerator. And then later I went to Microsoft. I actually worked on Project Turing, which is the precursor to this Edge Copilot in the browser. Back then we were using a different model. It was pre OpenAI era, but would summarize a Wikipedia article for you and all that. So I'm the founder and CEO of Ormi. So what Ormi does is essentially the unified and vertically integrated decentralized data layer. To keep it in layman's terms, essentially a decentralized snowflake. Essentially, AI compute, that's important, but as important as that is hyperscale access to data, whether it's on-chain data or off-chain data. Just to give you a few metrics, right? We serve over 5 petabyte data every hour, and we secure over 50 billion TVL right now. So if our system were to shut down, you would see red candlesticks in the market. So right now, our core focus is on the Web3 data space, but with the same tech we built from bare metal server up, we will be co-processing various AI agents, various dApps, or just simply general purpose, AI models.
Finally, this is the longest intro I've done in my history throughout all my panels, but at last we have Adi from W3. Yep.
This thing is on? Yeah. So my name's Audie. I'm the CTO of W3.io. And what W3.io does is, we don't like to use this in marketing, but it's programmable workflows for Web3. Okay, so you can imagine a situation where you just want to react to something on chain, do some database processing, verify an identity, all these things. You do this stuff trivially on AWS and Google, right? It's really easy. It seems cheap, but it's not. And my history, I moved full-time to blockchain in 2020. I launched VitaDAO. And I started to work through all these projects. And every project I worked with had the same set of problems. And it was spin up a Google server, hire a dev, make your things happen, and off-chain or off-board your money to pay for Google and AWS's 80% margin. So that 80% commercial margin. So that's what I wanted to try to get away from, and that's what W3 is designed to be. It's designed to be in competition with AWS and Google. So what we want to do is we want that infrastructure. We don't want developers to have to set up infrastructure. We want them to set up the core of their problem, the crux of their problem, instead of focusing on spinning up servers and connecting databases, which is not fun. So how this helps with AI, what we're working on is verifiable workflows, and AI is a black box problem. And we have partners like Equity Labs that do hardware verification of data. You guys have all these processes that are doing verification of where the data is coming from, hosting the data, making sure that it's correct. But when you start to think of multi-agent workflows, which are coming, they're closed in-house silos now, but multi-agent workflows for agent, and you can come up with all kinds of ideas for this, but multi-agent workflows, how are you going to verify that this AI talked to that AI? Or even like, I pay for an AI service, how do I know that I'm getting the service that I want? And they're not just redirecting me to some cheaper model that's approximately correct, right? And this is particularly important for things like trading and things like DeFi in Web3. So these kind of things, it's the communications between and the stitching of those value props. So like all those things that we have. W3 has a bunch of partners like database partners, AI ML partners. I'd love to make all of you partners, and right. But we're about lifting everybody's boat so that we can stitch all of these value add decentralized partners together into real business solutions that come with verifiability both off chain and on chain. So that's what we do.
Now we'll get into more specific subsectors of decentralized AI. So I'm going to talk more on data. Just to reiterate, data is the growth engine, the fuel for AI. But more importantly is the high quality data, which is actually low in supply. Actually, there is an overabundance of low quality internet data, but there's a low supply of high quality data. As much as the quality needs to be high for data, privacy, data ownership, and provenance is very important too. But speaking on the privacy side, I want to talk mostly with Akave and Ormi, especially with Akave. I just wanted to know how your team is making sure that the data management is done decentralized way, but also in a very secure and privacy way as well.
Yeah, so the way we do it in Akave is what we did is, and this is coming from feedback after 3 years being at Falcon, where I was head of network growth. We had a lot of customers come in and they wanted to use the decentralized storage, and they love the immutability, the verifiability, the on-chain proofs, basically, that something wasn't changed and is legit and authentic. But the challenge that they had was that they wanted to see the format in an object-like style or a blob style. And so what we did is we built sort of like the same data structure outline, meaning you have the concept of a data wallet in the sense, right? Where instead of using an account on Amazon, you control with your wallet how your data is being managed. Within that wallet, you have the concept of an object, first a bucket, which is very similar to how Amazon does it, and then objects. And the value here is that the user is in control over how this data is stored, where it is stored, plus how it's encrypted. So all of this, the data processing, is happening on the client side, not in the protocol, not on the backend, but it's happening in the client SDK, which means that they can run it in a TE environment as well if they want to. So they have more controls on the security side, plus they control the encryption key, they control how data is being protected across this network of decentralized nodes.
Thank you. And for Victor, I wanted to know what you mean by definition of reliable access, because your company focuses on reliable access of data at petabyte scale. So how do you define reliability, and how can anyone else access high quality data reliably?
So mostly questions on reliability, right?
Reliability,
Well,
yep.
that simply means 99.9% uptime in a decentralized environment, which is actually insanely difficult to do with fast queries. When people put platform, right, they may care about privacy or they may don't, but they do care about their application has to run, so that's what I mean by reliability. So I can go into details about our architecture, how subnets, how there's a scoring system for what nodes gets query, our proof of query implementation, ZK proof and all that, which I won't. But the metrics speak for themselves. 99.9% uptime. That's what I mean by reliability. And of course, right, in the data, right, a user can upload, data they want, right? That's for co-processing with AI agents, with dApps. But right now, actually, one of the major, in Web3 intersection, that's just simply pre-built on-chain data, unified layer of all the blockchain data. Many of those blockchains are not just DeFi; they are social dApps, they're games, all that just naturally form those data models that are in the unified access. So we're essentially opposite to what EigenLayer is. That's data availability layer with a data accessibility layer. What goes in via EigenLayer will have to come out on our side. But short reliability just means uptime. Yeah.
Got it. We're going to move one vertical stack up to the model side. So basically how it works in procedural way is that you have raw data, you do data processing, you do data fine tuning, you validate with the benchmark for models, and then you deploy the models. So speaking on the model side, especially for Sentient, I want to know how you guys make sure all the stakeholders, miners of the models have high quality models through your OML AI.
Okay, there's a couple of things to unpack, I think. So first, I think you put it really well. We add one level of abstraction to data. And there, I think we're in a good position to be as a sort of like a consolidation layer for different data protocols. What we want to do is consolidate all these data partners and allow users to build completely decentralized complete data pipelines. What this means is, can you put different data protocols in one place where builders can now basically go from data sourcing, synthetic data generation, to data labeling, benchmarking, indexing, etc. And you also said that there's this overabundance of data on the internet. If we are going to get to a place where we have thousands or millions of models that are like fine-tuned for specific use cases, we will have to tap into the community. And this overabundance of data on the internet means that the current models are a result of two things. A, it's basically an aggregation of opinions and data, all the data, but also bias that's introduced by these closed companies. So if you don't agree with everything that's said on the internet or with stances that are being pushed by people behind OpenAI, Google, etc., these models don't represent you and are not aligned with you as a user. So there's necessity beyond just tapping into the community is not necessarily only to create more performance models for niche use cases, but also to create models that actually represent us as individuals and groups. And that's where OML comes into play. So OML stands for Open Monetizable and Loyal Models, and there's two sides to it. The first one is this ideal form of OML, which I mentioned earlier, where we somehow embed loyalty and this strong alignment to a set of values into the weights themselves. Now this model is reliable and it's going to be very opinionated on certain topics. It can be loyal to contracts, loyal to you as a user. It's basically like very much similar to how humans are loyal to one another. The second aspect of OML is this tool set. Before we get to a point where we can granularly achieve this granular alignment, we want to provide a set of tools for builders to mimic this alignment to a certain extent. This includes TEs, verifiable compute, and everything that goes along with it. We published our fingerprinting library in November, and we see fingerprinting as the first step to this final OML. What fingerprinting allows is, and fingerprinting and watermarking has been around for a while, but always at a cost of performance. We found a way to embed initially 4,000 to 5,000 fingerprints, but now I think we pushed it to about 20,000 to 25,000 fingerprints or specific query response pairs into the model, where model acts deterministically. So every time you ask this query, you get a very well-defined response. And these fingerprints are secret. We distribute them to model owners, and they can be used to verify model identity and enforce ownership right guarantees. So now if you build a model, you publish it open source, you attach some sort of a license to it, and Amazon decides to build a chatbot on it, you have a way to confirm that this model is indeed yours and that the license has been breached. So that's the first step towards this fully monetizable, I guess, open source models.
Thank you. And I think it goes similar to Scott as well. I would love to know how your proof of AI consensus allows everyone to be fairly rewarded, whether it might be data miners, whether it might be model contributors on Kite AI ecosystem as well.
So first is that I want to do a little bit of clarify or different data here. Actually, most of the personal data is actually relatively useless to train a model. If you think of different modality of model, I think most will talk about a large language model. Currently, if you look at the red pajamas, the preparent data set, it's a trillion it's a trillion token already. It's like all the 50 years of internet history, thousands of years of different writing, a few hundred years of paper publishing, all the data. Like individual contribution to the this text data is actually very limited. But on the other hand, for certain robotic data, all this biomedical data is actually in great leakage. For example, I think today OpenAI is paying $2,000 for Berkeley math school students to solve 3 problems. You need to, very detailed break down the problem solving steps in this case. So when we talk about data, it's really what type of data is very important. Then from the data, then we can think about what actually the model from it. Rumors said, not confirmed, rumors said DeepSeek actually phishing distilled like a 10K distilled data point from OpenAI. This is a step-by-step breakdown of the data, actually train the DeepSeek. That's why I say all this very detailed breakdown, logical reasoning part. If each data set is actually pretty expensive, you basically just shortcut millions of dollars, tens of millions of dollars, so the cost. Because from data attribution to model, it's a hard problem. There is a lot of research. For example, the latest research is from Data Sharply. Data Sharply from Stanford, Professor Tang Yu wrote. It's a still research problem. How to actually judge like contribution from the data to model. All the research, most of the research do is that assume that you're using 20 data set. I'm going to train the model first with a random like 19 data set. Just kick one out, and then train the model and comparing the performance difference. If you think about it, OpenAI spent $100 million train GPT-4. How much? It's like 20x the cost in this case. It's definitely not feasible. So what we currently implement for our agent subnet and data subnet is that we like market decide. If you want to charge $10 per million token for your data set, and then agent use 10% of your data set, okay, you're going to pay the $1 per million token to this data set provider. So this is something feasible and we build currently. But I think in the future, maybe some algorithm and decided what's the correct attribution per data. For now, it's still a research topic. Yeah.
Yes, speaking of high quality data, I've been also secretly looking into a lot of the physical AI. And like human, I'll give an example. Like there are a lot of public internet data, but basically on a high quality data, especially for humanoid robotics, they need to have very fine-tuned data sets. For example, if you do like a visual AI, you get visions of different pictures. It's not just the raw pictures of the vision that you need, but you also need to fine-tune it so that it looks like a 3D mesh geometrical spacing in a closed environment to have the best data points labeled and processed so that it can be fused into the humanoid robot. So I think people need to be aware of the different sets of data, whether it might be public, low quality to high quality. Just wanted to give you some side note. But I want to talk about the verifiability side of the things too through Hitu, Jalin, because I think you guys are like the oracle for off-chain like data procedures and everything to bring it on-chain and verify it. If you could delve a little more on that so that people can understand why it's important and why majority of the data procedures are happening on off-chain and why it's important to bring it on-chain through oracles like you. Yeah.
All right. Okay. So I think so I think on-chain or chain structures still have clear limitations on first what they can do, the capabilities, and also there are things that are what we call subjective, right? So so the smart contract and blockchains are really good at things that are more objective, right? So but there are many things, particularly in AI, there is no clear correct or wrong answers, right? So we want to do it in the subjective questions, right? So so we still need to do most of these, and due to the resource constraints, we need to do this off-chain, right? So how do we bring this data from off-chain to on-chain, or these computational results from off-chain to on-chain, right? So so with on-chain, so these are basically oracle questions, right? And how do we bring this oracle data on-chain? So we need verifiability, right? So how do you do verifiability? Right, so we know there are existing verifiable computational techniques, right? So zero knowledge proof and so on and so forth, right? So we still leverage those, right? But there are also questions beyond that, right? So it's not just you are verifying your compute, but you are also you have this chain of computations, right? So your computation result not just come from one particular computation, right? It's actually a chain of computations, especially for these AI scenarios. Right, so a bunch of these steps, and then maybe multiple participants or that involved in this off-chain computational process. Right, how do you trust each individual process computational result? Right, so there's this one technology we are leveraging is called IVC, right? Incremental verifiable computation, which is a relatively new techniques in zero knowledge proof. So we're leveraging IVC to do this kind of incremental or like a progressive kind of computation. And then especially the nice thing about IVC is that you can limit the proof size, right, to a constant proof size, but you can verify the entire computational chain. And then we essentially embed that verifiable computation or IVC result in our like communication step, right? So we embed both our verifiable computational result and these what we call logical timestamps. I pass it around in the communication process, and then once we becomes on-chain, you can essentially use one verification step to verify the entire computational process. So that's the key technology we have been using.
Thank you. And moving one more stack up, after model deployment, how the heck do we scale these apps? Whether it might be models, whether it might be through foundation models or derivative models, whether it might be AI agents or widgets. I just wanted to ask you, Audie, like through your smart contract orchestration layer, how do you scale up all these apps that are deployed through your team as well?
So W3.io is a stitching together the computation of a bunch of different partners. So I can list examples, but space and time for databases, Pravado for ID, things like that. We don't necessarily have to scale because the compute to stitch things together is pretty small in comparison to the compute that our partners are doing. And we're more about making sure that they can scale, and that's why they're partners. So for us, it's we have to scale to the demand that we have, but it's really just stitching together these computations. So our scaling for us isn't the biggest concern. It's making sure that our partners have that scale, and they all do, because all these partners are solving the same problems everyone here is: decentralized data, decentralized computation of some kind or other. And verifiability for all of those things as well. So for us, the scale isn't really the barrier for us. That's just not where it is. We just want to make sure that everything everybody does, like Hetu, like Jalen was saying, those computational chains, that you can follow them all the way back to the beginning. And for AI, that includes the foundational data, the training, the weights, and everything else, because we do have that problem of attribution in this space, right? The big centralized providers don't attribute, they just steal, right? And if we can incentivize people to bring that data and bring, like, for us, network computation, and all of our partners do the same thing. They're incentivizing people. So it's really just an incentives game. How do we make sure that good actors are in the system getting incentivized to do good work? And that's the scaling problem. It's not, we've got a lot of room to move on scale. We need really a lot of good actors putting a lot of good data in the system and a lot of good computational results and everything else that we can just flow through the system. And like Jalen said, trace that causal chain all the way back to the beginning and be sure that what we're getting is what we want.
Got it. Yep. I think since we have like 5 minutes left, I want to ask everyone questions starting from you and then going the other way this time. Because I want to, what would be the actual revenue generating block AI cases? Because one example is we have seen the BitTensor ecosystem, but there are like, as a pre-detail, there were like 64 subnets, but basically all the revenue comes from tau emission. It's not actual revenue generating, it's emitted tau that is counted as revenue. So we're still nascent in this decentralized AI industry to generate actual revenue. So I want to ask every panelist here to give me like one or like two examples of what could be the first blockchain-enabled AI use cases that could generate actual revenue. Yeah.
Okay. So we are actually pursuing exactly this. We're starting from a business first perspective at W3, and we have a partner in Creatorland, a Web2 company that is doing AI workflows around email inbox overwhelm for influencers and creators. They're a marketplace for that kind of thing. And so these people don't have time to spend 4 hours a day going through their emails, and Creatorland is creating a multi-agent workflow around simplifying that for them and making it so that they just get the deals in their inbox. They just have to deal with the important emails. So that's one example. And basically every company that we talk to has an AI element that's attached to it. So things like treasury management, or there's risk management is Mendy. We have a partner in Mendy Finance. We're working with them on connecting some risk management and AI workflows around that. So as long as we're starting from a business first perspective, the revenue isn't really a problem. A lot of times though, it's really hard for Web3 companies to break into the businesses that bring money into the system. And when they do bring money, then they have to offboard that auto Web3. So that's the problem that we're trying to solve. Is we want real customers, and that's where we're starting. Even before we have our testnet fully public, we've got deals running that are that are bringing revenue into the system.
Yep. So real customer or real revenue generating. And I'll keep it to one example as well. Yep.
Real customers.
Yep.
Real
Correct.
customers.
For us, we're fairly low down the stack on the query layer, like decentralized Snowflake, right? So there's all kinds of agents are possible, but we're not just talking about the future. Right now, many agents, AI agents, trading bots are live on our platform. They make like millions of dollars per month. Like if you want to make some money, talk to me. Like I'm not like kind of shilling this, but I'm saying they're actual agent clients. They spend a lot on our infra and they make a lot of money. AI agents doing trading. So that's what I see now. And but of course, going beyond just financialization and trading, right? Anything is possible because we're far down on the query layer.
Yep. Mm-hmm.
Yeah, so what we're seeing is we're going after Web2 customers, deepen networks, and we also see some smart agents, but where the money is coming for us, at least, is from the enterprise. They're trying to remove their data sets from the cloud. Why? Because they're starting to run more compute jobs. They're starting to experiment with more AI workloads, and their first step is, oh, I need to move my data out of the cloud because every time I move it out, I pay for it because the egress costs are really expensive. And so that's where we are seeing the first revenue coming in. Some customers have asked us, hey, can you integrate with Snowflake? Can you integrate with Apache Iceberg? Because those are some of the tools that they're running. And then they're also asking us, how can we leverage this new, these blockchain primitives to play around with smart agents? I haven't seen any revenue coming from that directly for us because we're lower in the stack, but predominantly we're focusing on Web 2. And then the deepen networks, we're seeing an interest in designing in the data layer, the AiFi SDK, in the deepen devices at the edge, just because they need end-to-end data provenance and verifiability across the whole pipeline.
Right. So, for Hey2, we're focusing on slightly different scenarios. We're focusing on AI for science. But first of all, before making revenues, I think that's a great place where decentralization AI can make contribution to actual, real impact into humanities. But I think even beyond like doing science, I think AI for science or DAI for science has also have a huge like revenue possibilities. I think with all these AI breakthroughs making a huge for example in the medicines and some of the other areas where you can there's a huge kind of marketplace, right? So we are not there yet, but I think there's a good potential of having good revenues from there.
For us, it's simple. We want to make models that are top of the line in their respective use cases. We want to allow builders. Initially, we're bootstrapping this. We have a few research teams developing a few initial models, but we want to allow anyone to build a model. You have access to some sort of domain-specific data. You can create a model that's going to get used by the market that you target. So say if you're a shipbuilder, you have access to some sort of domain-specific data for shipbuilding, and you contract us. We run a data campaign through our partners. We omalize this model. Now it's monetizable, and it's getting plugged in, and it takes care of bureaucracy and all these processes for shipbuilding companies around the world.
Yeah, so I want to pause for a second and look at the bigger picture here. I was in Salesforce 12 years ago, worked there for 4 years. Salesforce represents SaaS. They grow the revenue from $3 billion to $400 billion in 15 years. Currently, all the AI revenue, if you look at all the global AI revenue, it's $6 billion as end of 2023. But they're targeting $10 trillion industry. So that's why there is a sharing from Secure ascending last year, around last year, April last year. They mentioned over the next 15 years, this can be 1,000 times increase from $6 billion to $6 trillion in this case. So this is a bigger picture. But if we look at the current, again, so I presented like 40 minutes ago. Currently, the biggest biggest problem for mass adoption is models, this how performant model are. Currently, I saw 3 major use cases. I already found traction. This customer support. This is found a tons of traction. A lot of VC actually just buying customer support company and then empower with AI in this case. And then second is that programming. In this case, OpenAI is all in programming. They spend tons of money buying all this programming to reinforce learning on top of this. And think about this, even US alone has 3 million programmer. The average salary is like a 90K per year. So that's $1 trillion market. You probably see tons of the breakthrough. Not going to be replace all the programmer, but you don't need this junior programmer in this case. So that's one, I think one use case going to landing very soon. The third use case is emotional companion. No matter creator, digital twin, character.ai, people willing to pay tons of $100 per month for this, and there are actually tons of requirement for this in this case. A startup founder of mine, they just built a wrapper on top of Llama model. They're profiting like $10 million a month just from this. There is a strong demand for this. You just need to find your customer. But from demand side, I saw tons of demand from demand side. This is what's feasible. But this is, if this side is like what's actually strong demand, cancer detection, huge demand. It can save trillions of dollars there. Some of the use cases already building by Berkeley, MSK. Kite AI is big part of this process, trying to connect this additional data source for this cancer detection. All the cancer detection in US require 2 physicians to sign off. A law was passing 5 years ago, make sure one of this can be AI agent in this case. So that's why it's possible today, but it's still a few years to land. Autonomous driving, I think ever since the general AI model, the end-to-end transformer, end-to-end foundational model actually proved to be best in this case. One of my classmates now co-lead the NVIDIA robotic lab. These are great breakthrough there. I think this may be the first year of robotic. So that's from a strong demand side in this case. So I think the supply side and demand side, what's required and what's feasible going to be converged over the next few years. I'll probably see a lot of breakthrough.
Yep. Thank you so much for not 4, not 5, 6 panelists here who are working 24/7 to pioneer the various vertical stacks of decentralized AI to reach not only the Web3 total addressable market, but beyond the Web3 total addressable market in meaningful ways. So thank you, everyone. Yep. Thanks.
Thank you.
All right, people, moving on to our 5th keynote. Will you please be able to give a big warm welcome to Ambro, the CTO of Carve. So Carve are building a data layer for gaming and AI. So please welcome, here he comes now.
Cool. Hi, guys. Thank you for having me here. So I'm Ambrose. So this is our BD lead, but I'm CTO. So he's not here at Denver. So I will be taking his place. So yeah, I am really happy to be here. I'm Ambrose. So I'm CTO of CAF. So before joining CAF team, I was at Coinbase. So I worked at Coinbase for 4 years. And I was staff engineer working at key management, staking, and the base chain. And then before that, I was blockchain lead at Lino and DLive. So we were building a live streaming platform on top of Cosmos. So yeah, so today I wanted to share with you about CAF. So for CAF, what we have been building is the data infrastructure for the gaming and AI. So we try to explore a lot in this space, how data can really power the AI agent. And today, I feel like there are a lot of different use cases, and everybody's talking about data, right? But right now, to be honest, I didn't really find the Web3 has been really utilized in the AI agent space. I wanted to maybe tell you more about what we are doing here at CAF. The CAF, initially, we try to aggregate all the users' identity from Web2 and Web3. So we know who you are. We have the Discord account, Twitter account, and your on-chain address. So we try to aggregate all that information together. And we feel like this is something which will be more powerful with AI. Today, if we talk about AI agent, most of the project I have seen is using AI as a tool. They help you to trade, they help to understand more about the blockchain. Don't take me wrong, I feel that's very solid use case. But I think like with Web3, we can do more. There's only maybe one use case which made me very exciting about Web3 with AI, which is like you have the AI to control its own private key. So the AI, the first time AI has its own asset. So this is something I feel very exciting about. This is only be possible with Web3, right? So you cannot imagine without blockchain how AI can access their own asset, can control their own asset. But that's it. So all the token utility right now you see with AI maybe more like a meme coin. There's no too many utility. And all the project today, I feel like there's much more we can do with the Web3. So for us, what we try to do is we provide the so-called data framework. We try to provide all different kind of data to the AI agent. So not just the data which will help you to trade, but more data to help AI to understand its token, to understand what is happening in Web3. So for on-chain data, we have all the raw data, including the blockchain raw data, block transaction, etc., in the circuit database. And then if we feed the schema to the AI, AI will automatically understand what kind of data they can fetch, and they can fetch the necessary by itself. And second thing, not just the on-chain data, we also offer like all the data maybe you just cannot purely get from on-chain. For example, like token info and price. This is something maybe you can also get from the Oracle. But right now we also see maybe multiple different ways we can fit into AI. On the off-chain side, given we already been building the CAF ID for a while, we aggregate the user identity together. So this is a very interesting use case we can bring into AI using this aggregation. So one example, this is something we have been already built, and then we already merged this plugin into ELISA. So we provide this on-chain information to the ELISA AI agent. So when you ask a question, for example, which address on Ethereum was the most active one in the last 24 hours? So we implement a provider in ELISA. So it will just interpret by the AI LLM model. So it will just generate the corresponding circuit query based on the schema, and then generate the necessary information based on the query, generate the result in the natural language. So this is just one very simple example, but we first time giving maybe some kind of information to the AI to let him decide what kind of data they need and what data they need to fetch from the blockchain. We try multiple different ways. We do the tuning, we do the training, and we also put this into the memory. But in the end, we find this is the best way, have the most structured data structure to let AI to understand what's going on. And for CAF ID side, we try to aggregate all your identity together. This is something we have been building for over 3 years. So right now we have over 9 million users, which mean the CAF ID. And we also have over 20 million registered users across different platforms to aggregate their identity. So this is something I would say very interesting stuff. So if you think about AI agent today, right? So most of AI agent, they are on social media. They're on Twitter, Discord. But right now, if you talk to an AI agent, they have no idea who you are. They have no idea how they wanted to trust. And this is something we feel very unique opportunity we can do here. So how about if you talk to an AI on Discord, on Twitter, we can tell AI, okay, how much token you are holding, how much AI token you are holding. Because right now, if you think about all the AI today, they have their own AI agent token. This token is an asset controlled by the AI. But the key point about Web3 is we can use the token for economic incentive. And then this is the first time ever we feel AI, they can start trust human. So what's the best way to trust a human? I'm holding your token. I'm the AI agent. I issue some token. You are holding some of my token, and then I should be able to trust you because you are interest aligned with me. I feel like this is the best way you can interest align with human by economic incentive. So this is something we feel it's a very good use case for the AI agent. This is something we are building. And we try to give this information to the AI agent, like, hey, this one who is talking to you, they are holding how much of your token. This is how much trust you can put into these human beings. So we want to convert the relationship from AI helps human to human helps AI. And by using Web3, we can resolve this issue by token we use token to let AI to trust humans by having the token incentive. So this is something we are actively building. And we build an AI agent framework. So this is something very similar to ELISA. So we try to combine all the different modules together. We can help AI to understand their token. We even do the governance, do the staking through our data framework. So this is also, we try to bring the governance staking into the social media. So the AI agent is more friendly to do the staking governance using the token. So this is something you can only achieve in Web3 and with our identity aggregation. And we implement like several different ways for AI to understand this information. So very basic, we have our API. So this API will allow you to fetch all the necessary information you need in AI agent-friendly way. For example, the data, we just have all the schema published. So you just feed those schema to AI agent. AI agent will figure out, okay, what kind of data they can fetch and generate corresponding query. And we also implement the plugins. It has been merged into ELISA, Virtuals, and ZeroPi. So if you are using any of existing framework, you can easily access the feature I just mentioned. And also, we have also built our own AI agent framework. So it's a public, it's an open source code base written in Golang, and then you can access that easily using any kind of format you want. So this is something I wanted to deliver. It's like right now, I would say most of the project, right now we think about how AI can help human, right? So we feed data to AI. We use AI to help humans to do trading, to understand crypto, to help them to manage assets, etc. But I feel like this is not something you need Web3. The Web3 can do even more than just using AI to help human as a tool. I think in Web3, this is the token incentive can really help the AI to identify the humans to trust, can really leverage humans to help AI to do reasoning, to do training, to do all different kind of job you can imagine. So given all the stuff we are published, we already open source. So we wanted to also see if there's any project developers, they kind of excited about this idea and try to build a different kind of use cases on top of these ideas. Yep. So this is my presentation, and I think that's all. And thank you guys for listening. Yep.
All right, the room is starting to thin out, and we just got our big hitters coming in right now. So joining us for our fourth panel, we have industry leaders to share some insight on the next super cycle of Web3 with AI. So can we please give a big welcome to our moderator, Jimmy from Chainlink, and we have Sarah from BNB Chain, Matthew from Avalanche, Chase from Arbitrum, and Mark from Near. All good, I think. Cool. I think they all almost a little. There we go. Yeah.
I just messed it up.
Check.
Hello.
All right, mic check. Sounds like we're good. All right. Hey, everyone. Welcome to our panel. Really excited to be talking about this today with our wonderful panelists. So my name is Jimmy. I am at Chainlink Labs. Super happy to be here, but just to kick things off, why don't we just go round robin, who you are, one sentence of what you're up to, and then we'll kick it off from there.
Hi guys, this is Sarah from BNB Chain. I'm the head of BD of BNB Chain. BNB Chain is a layer 1 EVM compatible public chain.
Hey everyone, my name is Matt. I've been at Ava Labs the past 3 years. I originally joined to do DeFi growth and business development, but as of the past 2 years, I've been more of a generalist, and so lead all of our external data efforts, help out with a variety of infra, tooling, and security projects within the ecosystem, and also helped out with quite a bit of our RWA and tokenization efforts. But thanks for having me.
Hello, everyone. Can you hear me? Yeah. Hello, everyone. My name is Mark Mee. I am the head of partner development, VC, and investment relations at Near Foundation. Near is a highly shardable layer 1 blockchain And I think we'll talk a little bit more about that later.
Hey everyone, I'm Chase. I lead AI and infrastructure partnerships for the Arbitrum ecosystem. Arbitrum is the first optimistic EVM L2. We also recently added a co-equal WASM virtual machine through our stylus upgrade.
Wonderful. All right. So to kick things off, I want to contextualize like where are we right now in this moment? And I'm wondering, Chase, maybe you can just give us the lay of the land. Like, where are we right now at this intersection of DeFi and AI? And then we can kind of like branch out and dovetail from there.
First inning, really. Yeah, ironically. We saw in, let's call it, end of 24, beginning of this year, a lot of flash around slop bots on Twitter, posting. Truth Terminal was truly 0 to 1 innovation, first agent millionaire. Very, very interesting. What we're starting to see now is the market's cooled off a little bit. People actually have time to be heads down building. So we're starting to see agents that are actually managing liquidity in LP pools, running looping strategies, trading fairly well. But there's still a long, long way to go.
I'm curious too, like, yeah, if you have more to add on that.
No, I was going to add, like, absolutely first ending in terms of, I guess, what you can do. I think one thing that's quite interesting is, there was such a huge buzz on AI agents, right? And if you actually look what they do, it's like, going through and screening Twitter, looking for indicators, summarizing. I think one thing, at least that Near is kind of doing, is we have a AI assistant, which at the end is really looking to execute and do action. And I think that's the next phase of kind of what we're saying in terms of, AI and DeFi, right? It's exactly what Chase was saying earlier, and actually, being executing and managing, which I think we haven't really, that has not really matured yet and isn't really usable yet. But there's actions that you can see that you can trigger action, right? Oh yeah, swap A to B for me, or go do this, go buy me that. Sure, that looks amazing, but it's definitely not ready for the real game yet, right?
I think that's what really excites me personally. I think the first iteration that we saw of like AI agents within crypto were more similar to meme coins, but instead of having to have someone like create content, kind of have a community regarding that meme coin, you could just have AI agent chatbot on Twitter kind of curating that content. And now we're seeing kind of AiFi take place, to your point, in which you can just like type in a prompt and say, all right, bridge from A chain to B chain LP within this DeFi protocol, and it'll be able to do it for you. And that has much more fundamental value to me in terms of the next iteration of AI rather than just a chatbot that's kind of fun to interact with. But yeah, I think it'll really go well with smart wallets and allow onboarding for DeFi for just stereotypical retail participants much easier than before.
Yeah, are those the use cases you're seeing have like traction, staying power right now? Like if you kind of had to give us a roundup of like what's actually like meaningful and has traction and is going to stick around for a little bit, like where are we right now? Like what do you see as the most prominent use cases?
Yeah, I think that's probably like the next iteration that retail is interacting with, whether it be like Hey Anon from Daniela Seste or Slate, Griffin was a good one in terms of Solana. I think that'll have staying power as well. I think these AI agents or just AI more holistically that has some sort of fundamental value attached to like the actual underlying AI infrastructure will be those that actually stay around rather than something that might just be cool at the time, but not have a lot of longevity.
Gotcha. And Sarah, I'm wondering if you could add on to that. And then also there's sort of this concept that's emerged, right? Like anyone who's been in crypto for a long time or has studied the cycles, this fact pattern emerges. It seems that every cycle seems to have like a catalyzing technological innovation. And a lot of people are like, well, last cycle was DeFi and NFTs, and this time is it AI? And I'm just curious how you guys view that.
Firstly, I think where are we now in terms of AiFi, right? I think we are having the basic function right now, which is good, but we're still lacking a lot of like basic infras here to support to make it to be really secure. to protect the potential risk for the retailers. And also there's like solution that can really onboard users easily to use this solution, but right now there's not ready yet. And also there's a lot of DeFi infras or tools or protocols that haven't been really integrated with those solutions yet. So it's the function is there yet already, but it's still not scalable. And we still have a lot of things to do in terms of, like, as mentioned, security, how to educate the users, and how to really expand it to different types of assets. So in terms of assets, I think in the future, I think we are gonna to tokenize everything. So right now, the AI plus DeFi can only approach to the digital assets, especially cryptocurrencies. But in the future, once we onboard more other assets in form of digital versions, then we can add that different type of assets and combine it to the different types of AI plus DeFi agents. So there's a lot of things we can do, and also multi-agents is coming as well. So we can doing a lot complicated DeFi solutions or applications based on the multi-agent framework in the future. So I do believe this year and next year will be the year of AI plus RWA. So we're gonna to tokenize a lot of the other different types of assets with different utilities and underlying values. And also we're gonna have more different types of AI solutions, especially AI agents and AI data related solutions. Yeah.
Yeah, that's really interesting, right? Like the tokenization of everything is sort of on a parallel path, but it seems inevitable that they'll intersect, right? The synergies of doing that are just like they're too good to just like be denied, I would say. And I'm curious, like maybe you mentioned infrastructure, right? Like we need to scale that, we need to get that. And I'm wondering if maybe this is a good time if you guys each want to talk about sort of the unique principles that you guys are each bringing to the table, right? From BNB, Avalanche, Near, Off-Chain Labs. Like, what's your secret sauce, your perspective on how you guys approach the space?
Approach different.
Yeah, how you're building
projects.
infrastructure for AI and DeFi.
Okay. Actually, first of all, BNB chain has three important tech stack. One is BNB Smart Chain, one is OPBNB, one is Greenfield. So that is a really ideal technical design for any type of DeFi and any type of AI protocols. Why? Firstly, BNB Smart Chain is the DeFi hub. So we have over 7 billion TVL right now. Locked on the BNB Smart Chain, and also there is another 7 billion stablecoins circulated on BNB Smart Chain. And also the gas fee on BNB Smart Chain is also now to $0.03 per day. This year, we decrease the gas fee a lot and increase the TPS a lot. So BNB Smart Chain, the layer 1 protocol, can be a really ideal hub for any type of DeFi or assets. So if you are really doing an AI agent, you want to launch your assets, or you're doing the payment among different agents, like in multi-agents framework, BNB Smart Chain can be the ideal layer for that. And besides that, if you have any data related, or like, for example, you wanted to combine AI plus data, you wanted to give data permission management solutions, then you can utilize Greenfield, which is a great decentralized storage protocol here that is having embedded bridges between Greenfield and BNB Smart Chain and OPBNB. So by having that, any type of AI plus data solutions can find different tech features on top of that infrastructures. And also, if you are doing high frequency dApp, then you can put it onto OPBNB, which the gas fee is even lower and the TPS is even higher, which is also a layer 2 building on top of BAC. So we are, from technical perspective, we're quite ready to support any type of DeFi, any type of AI protocols. And besides that, there is already 500 million unique addresses on BNB Smart Chain, which means if you really wanted to build a user board and valuable products to the end users, we already had a really good, large group of potential users there. They have their wallet here, they have the digital assets in their wallet. So if you are a developer, you definitely will consider that. I think that is why we are pretty confident. We are talking to different developers and entrepreneurs to bring them to BNB chain ecosystem. And also there is a lot of SDKs for AI or a framework for AI and for DeFi. And the DeFi infra, like lending, like Pancake Swap, like the access is also already mature in our BNB chain ecosystem. Yeah.
Great.
Yeah, so outside of just the stereotypical like permissionless blockchain, RFC chain, for instance, we also have kind of Avalanche native LLMs, both for our projects, but also our developer docs. Outside of that, I think our biggest differentiation is in terms of our own architecture. So we have application-specific blockchains called Avalanche L1s. And within that, we actually have a new highly performant virtual machine called the Hyper SDK that we're seeing kind of a variety of builders build on top of. Right now, I think in terms of differentiation between like monolithic, permissionless smart contract layers, we're seeing an abundance of block space. And so honestly, there's not a ton of differentiation on that side. And I think we're starting to see more and more just application-specific tech stacks. I think Arbitrum has your Orbit chains. Base just announced app chains earlier this week as well. Cosmos has kind of pioneered this vision way back in the day, as well as Polkadot. But I think in terms of like AI application-specific blockchains, that'll be something interesting that we're going to see in the not-so-distant future. We actually just supported a team that they're called Robot, but they're not fully public yet. But they're basically building AI directly into the VM layer, and basically anything within their chain, including on-chain data, any sort of dApp, et cetera, will have AI built in. And so you'll be able to basically just interact with AI, and they'll be able to do, well, sorry, the agent will be able to do anything that you might want within that blockchain environment, for instance. And so I think we're seeing some like very interesting technical use cases that, like I said, our differentiation is mostly within like the L1 space and pioneering that in terms of kind of the deep tech approach of blockchain meets AI.
Yeah.
So, I mean, I think you probably really need to look into what we expect to happen in the future, right? I mean, when looking at the agents in a world or in the future where, you know, you're doing agents executing transactions with other agents, and it's no longer right now where it's, you know, just chatting with ChatGPT or something like that, right? And in order for that to scale and really make that happen, I think you're going to see trillions and trillions of agents, because each individual is going to have multiple, right? They're going to know everything about you. They're going to know where you're going to eat. They're going to know what you like to do. They're going to help you book, you know, appointments, doctors, restaurants, and all of that is really going to be triggered and really need to be focused on, I guess, how to execute that. One big point that Nir and, you know, founder Ilya is really focused on is the user-owned aspect, right? That's basically why we're here, is all the fact that we believe in decentralization. We don't want OpenAI to have all of our data and be able to know when we're going to use the restroom, what restaurant we're going to be in, what car we drive, and all of that points, right? And so in order, you know, in a world where we are activating our own agents and knowing our own data, you're going to need a highly scalable chain that could manage trillions of transactions, trillions of agents to do that. And I think, you know, I like to describe at least Nir as a, you know, what we're doing in the past, what we've done currently, and what we're doing in the future. In the past, you know, we're known just for being a highly scalable blockchain using shards, right? We have increased the number of shards from 1 to 4, 4 to 6, and now 6 to 8. It was like the original ETH 2.0 roadmap, right, that they did not achieve. But, you know, we slowly are scaling that up. Next point on that is to, you know, improve, you know, block time, right? Right now, I think it's at 1.2 seconds, now going down to 400 milliseconds. So there's a 3x right there. I kind of likened that to, you know, how sometimes you have vehicles like a V4, V6, V8 engine that sometimes your V6 is actually faster than your V8. Why? It's finely tuned, right? And that's kind of where the process is. But that's kind of what's exciting about, you know, what we're developing on the chain aspect. But present, I think, which will help out the long-term vision of AI is the fact that, look, you're going to need cross-chain execution. In the future, agents won't care about chains. They don't really care what it's built on, if it's on Arbitrum, if it's on Near, if it's on anything else. And the reason for that is because they have tasks to achieve, right? They need to achieve of, you know, I need to go book an Airbnb, for example, but I only have token X in my wallet, but how do I get there? So currently what's really exciting on Near is their Near intents, right? And that's basically a, you know, utilizing chain abstraction and Near's the chain signature chain signature to sign for transactions across different types of assets and trade that, right? So the most low-hanging fruit of an example of that is just swapping into different assets, utilizing a near account, right? So in the last few weeks, we were able to integrate assets such as Bitcoin, Zcash. I think the Zcash community has been really excited about that integration because they've been really stuck and not been able to really do anything in terms of the DeFi aspect. We were able to integrate Berachain on the first day that they launched, and thus you could do a swap of Bitcoin to Bera token, right? Now, this cross-chain execution layer, how it relates to that agent side is at the end of the day, once all this works, then you have more of the financial instruments that and the strategies that you can own and do and activate, right? And that's what the future looks like. It's pulling in, the near AI team is building out the infra, the Shade agent stack that you're able to really go out and complete these tasks or pull in all the different agents onto a dashboard and run them, right? So I think that's the interesting part of kind of what you're seeing in the future, at least, and kind of how near at least protocol supports in the function of the past and the present with the scalable chains as well as the near intents.
Love it. And I want to put a pin in your comment about not making sure OpenAI doesn't have all of our data, right? I think we should bring this back to privacy and the complementary aspects of cryptography there. But Chase, curious on the off-chain perspective here for scaling the infra.
I think you have to prepare for two things. One, eventually very soon you're gonna have a large swath of developers that are gonna come and they're gonna try to deploy agents on your chain that are gonna do different things. Some of them will be a super agent, and then some of them will be the agents that tasks are delegated to. So whether that be a swapping agent, a liquidity management agent, a lending agent, yield optimization, what have you. What we're doing to prepare for that is we have a consortium of teams building an agent kit for Arbitrum specifically, or Arbitrum chain specifically, that make it very easy for the agents to talk to the chain. The second has everything to do with, again, scaling for a world where once those agents are built, there's enough capacity, there's enough throughput for good price execution, low fees, and fast blocks.
Yeah, and I think it's really interesting to understand like what the infra is now and the roadmap. And I want to chat about like how is this going to impact sort of the DeFi primitives that we have built over these last couple of years. And specifically, I know there's a lot of chat about like how will this impact DEXs, how will this impact market makers, how will this impact liquidity pools. We're curious if anyone has thoughts on like what's this next evolution, like what are the second order impacts going to be on the DeFi that we know and love today?
I think there are a lot of very obvious and wide spreads in terms of like arbitrage opportunities, even across lending protocols on the same chain, on the same asset. When you have agents that are optimizing yield on these very basic pairs or even arbitraging those spreads, you'll start to see those opportunities wane away and the market will become increasingly more efficient. Particularly on the yield side. On the trading side, there's still a ways to go because agents can't operate as quickly as your basic, your traditional machine learning bots.
Anyone else jump in? Feel free.
Sure. I wanted to highlight, maybe change it up a little bit, because I think agents and AI overall is almost like a new front user interface, right? And it's no longer the same as kind of what we would expect and how we use it before, right? So imagine moving back to the future. You're moving towards the future. You're kind of the applications, right? Just like same thing right now with social media and apps, right? Right now we're always utilizing apps. In the future, I feel like that's going to be removed, right? And it's really that single prompt or that single app that's able to do everything, right? Because in the background, you're actually having different models running, you have different tasks going on, and so original question was, I guess, how will it change DeFi? Well, I think the whole view and how things work will be different. Parameters, right, of these settings, and there'll be a whole new slew of different types of hacks and different phishing mechanisms that I can't even imagine how that's going to look, right? And so it really is scary and exciting at the same time. And that's the beauty of this market and industry, right? We actually constantly test. And normal Web2 VC, the test period's like, a year to year and a half, like to see if something works, and you try to do product market fit. But here it's, thing hits, gets tons of traction, and in 3 months we realize, okay, it's not sustainable, and you kind of move on to the next thing and use pieces of that tech in which you realize it was a learning and you apply that to the future, right? So I think that's the beauty of kind of the industry we're in, and also kind of a curse that, we're constantly talking about sustainability and long-term interest, but obviously most of the things that take and grow and really has a lot of rise is very short-term, and we're trying to figure a way out to not have that.
Honestly, in my opinion, I think what AI will bring in terms of DeFi is democratization of just strategies and things that were once reserved primarily for institutions, bringing that to just retail, whether it be like sentiment trading based on off-chain data, or so just like querying Twitter and looking at like, oh, there's an uptick of mentions of this token, so we should go long this token, or in your case, you mentioned arbitrage opportunities. And so I think kind of smart agents related to AiFi will allow kind of institutional level strategies for the retail masses. And I think within that, we're even seeing, I mean, Athena, I feel like, was kind of the pioneer of democratization of the cash and carry trade for retail participants, because that's been going on now for, I don't know, 5 years, something like that. Probably less, like 3. But in terms of bringing it to like just the masses, I think Athena really did that well, and now we're seeing a ton of other cash carry trade protocols that basically are looking into like diversified yield from that trade specifically, and then in times of like bearish market conditions when funding rates might be less positive, then they go more into like, I don't know, short duration treasury bills or money market funds, something that is a little bit more sustainable, especially now that, to your point, everything is being tokenized. You have BlackRock's Biddle, Franklin Templeton's Benji, et cetera. And then you can kind of incorporate that with your stereotypical DeFi yield and get strategies that retail users might not have been able to get before.
Yeah. Like hearing a few trends, right? There's like this idea of the markets will become hyper efficient at any obvious arbitrage opportunities. We're able to iterate and build so fast and sort of like create the next new product so quickly and build on top of it. And it's just like, it's just really interesting to see what this will become, especially if we consider like in context of what the user interface will be. Like it might just be, natural language, or will just be like natural language with, the interaction. And when I talk to my Web2 friends, right, and they're UX designers, they're like, yeah, we realize that we're now designing software for bots, not for humans anymore, right? It's a really of how your products. I'm curious how you see like this impacting the DeFi that you guys are building or so aware of.
Yeah, I think just as you mentioned, right, that is really changing the interfaces for the retailers. So that is also how we can lower down the user barriers for them to enter into different DeFi protocols. So before, if you wanted to bridge assets from Ethereum to, for example, BNB chain, and do a token trade on PancakeSwap and then aid a liquidity pool on PancakeSwap, it can be quite difficult for especially Web2 users. There is this really a long process for them to do it. But right now, the DeFi plus AI agent, they are abstract all those process into one single sentence. So you just ask them to do it to you, and he will just do all the things in the back end. So that will really dramatically lower down the user experience, lower down the user barriers, and having a really more friendly user experience. That will help more retail users to do interactions or transactions onto different protocols and onto different chains. So that will, in the end, improve the liquidity segmentation issue. Right now, we are having on different chains, and also that will also improve the capital efficiency, I guess. And besides that, I think by having more end user retailers join this space can also improve the liquidities for DeFi in blockchain industry. So there's a lot of impact that in good ways that we can have, but also there is some like potential bad impact by having DeFi plus AI kind of like things, right? So for example, as I mentioned, there's gonna be risk issues and can be really big risk issues in the future if we do not really pay attention to the underlying infras and the securities for different DeFi AI agent. Yeah.
Yeah, I think there's a couple things, and one, you're sort of mentioning like a virtuous cycle or a flywheel of like as you democratize access to really, traditional like institutional grade algorithms and trading strategies, and you make the user interface better, right? More retail people can participate, or more just the world can participate, which brings more liquidity, which makes it more attractive, which brings in more people. So it's a really interesting like flywheel that's developing here. And I think you're mentioning too is like, well, and Mark, you talked like the future is going to be weird, right? Like we just don't know. It's just hard to predict. And I know some will be crazy good, some will be crazy bad. But I think now is maybe a good time to kind of pivot to, what are the guardrails that need to be in place? How do we think through that from either a privacy perspective or maybe some rate limiting or checks that, blockchains and smart contract platforms can put guardrails around this. So I'm curious if like any themes jump out to you guys that you've been thinking about, or how we should conceptualize this as a group here, but either on the privacy side or on the guardrail side.
I think most basic, which I think most AI companies are doing on the TEEs, right, to make it, the trusted, encrypted environment. Like it's definitely the low-hanging fruit of ensuring everything is safe, right? That you're not losing your input, your data, your keys, or controlling how that sandbox works. But I think at the end of the day, if you look at all the, I guess, issue, I mean, we're talking about security, right? And so, one, how much do you actually value that, right? Because if you do, then I think that's why you're looking at kind of the decentralized solutions for AI, right? Otherwise, you're just putting all of your business data into OpenAI, right, or large models. Another solution that's possible, if you don't want to do that, is build your own model, which I think most corporations are not going to do that. So that's why I'm actually really excited in terms of what we're developing within the, this AI space that we're in right now, that we can actually manage and control that aspect. And there's going to be businesses that want to use it because they don't want to create their own model. They don't want to share their info with the likes of the large controlled companies. And so there's different ways they could do that, right? They can license the data out, and you need a business model for that. And that's what many projects are building towards right now, right? Whether it's the data side, whether it's the usage side, whether it's, I guess, even the security aspect too, so that people aren't just stealing it. And so I think that's kind of the low-hanging fruit and not as exciting because that's already pretty upfront and clear that all of us know. And so we probably should talk about more wild themes that might be a little bit more interesting.
All right, well, let's spice it up then. Who?
As the space progresses, this isn't exciting for you. As the space moves forward and agents are controlling increasingly more assets, the importance of their security obviously increases linearly. That's why it's extremely important to understand where the agent keys are stored, how the agent keys are stored, and who has access to the agent keys. Lit Protocol is a team we work very closely with. They've built a very elegant agent wallet solution that uses TEEs and TSS. So essentially, there's a 2 of 3 MPC key stored inside of a TEE that ensures that the developer can't basically rug the agent's funds if your agent is something that's running like a yield optimization strategy, for example. And it also, you can also build in guardrails that are going to allow your agent to trade at its will, but also stay out of coins that are very clearly honeypots, scams, rugs created by Hayden Davis, and so on and so forth.
It's interesting because, to your point, I think not letting the developer rug the agent funds is like obviously one issue, but then you have to have the reverse where it's like you don't want the agent to go haywire. And so then you still have to have some control and you have to ensure the training data in which the model was trained on is actually good. And so most of the time people run it with like toy funds or something like $50, $100 over some specified period of time. But I think that's like the biggest risk. And you're kind of also mentioning like privacy of like PII. And I think in terms of just like blockchains, it's kind of interesting because you were also mentioning like what guardrails you want to put in, but we're all working within like permissionless, generally smart contract blockchains, and we try to avoid censorship and be censorship resistant. But if we're trying to directly censor agents, it's kind of an oxymoron because we're working in a space where you don't want to censor many things. I mean, within the Bybit hack, obviously, people are trying to censor certain like bridge transactions and whatnot. But within the agent space, it'll be interesting seeing if that's done at like the VM level or like what guardrails people will actually allow for in terms of like our, I don't know, decentralized environment, and like we're all working within the ethos of blockchain and crypto holistically. So.
Yeah, it'll be interesting. I almost feel like we're just going to be running thousands of experiments as people spin up their own L1s based on this, or their own subnets or whatever, and they're going to all exist on some spectrum of totally permissionless to highly permissioned and highly tuned to preserving things. And so I guess, you know, to the earlier point, right, we're going to just iterate, do a whole bunch of stuff at once and see which ones work out and which ones don't. Yeah, what I love about like crypto and AI are so interesting because they're sort of like their strengths and weaknesses almost overlap in a like perfectly complementary way. And so it's such an interesting opportunity where you can achieve this like massive scale and massive economic unlock without having to hand over all your personal, but while still being able to preserve a lot of like the DeFi ideals that we hold near. But one area where maybe it's like, maybe there's a little bit of tension is like on this demand for compute, right? So AI is very compute hungry, right? We want the biggest models, although maybe DeepSeek turned this up on its head a little bit, but lots of GPUs, lots of compute power is needed. And blockchains are by design a very compute expensive environment, right? Because we have security and consensus and decentralization, it's obviously gonna be a lot more friction and a lot more, you know, expensive than just something that's just a database somewhere, just GPUs running freely, right? So I'm curious, how do we think about this tension of like the demand for compute, but also the ability to supply the underlying infrastructure in the same way? So like, what do we do with that? How do we meet this scale that we think is going to be coming in the next couple of years?
Actually, there is pretty a lot project that is doing decentralized computing in our BME chain ecosystem. But honestly, I believe at this stage, at least for the next 5 years, we still need centralized computing solutions. Because we know, although that we know DeepSeek has already lowered down the cost for training large language models, but they are also requiring a lot of like GPU, CPU to do so. So I do believe in the future there's still a hybrid models, like combining centralized centralized computing models and decentralized computing models to provide these solutions to different protocols and infras. And also we wanted to see in the future there's gonna be more interesting and efficient incentivized or monetization models by utilizing blockchain that can really incentivize different GPU in different spaces or different world, etc. So we can make the utilization more efficient. But honestly, at this stage, as I mentioned, right, I don't believe decentralized computing can really solve the almost all the demand in this space.
Very cool. And I think we're just about at time. So maybe we can just leave here with like one prediction or like what's happening in 5 years from now, the year is 2030. Like, what are we looking at in one sentence? Any bold predictions here?
I can start first. So I think by combining DeFi plus AI and the AI plus blockchain, we're gonna really build a smart digital economy in the future.
5 years from now, honestly, I think 5 years from now, if AI meets blockchain gets to like where it's supposed to, anything in terms of like DeFi will be fully automated, and you won't have to touch your protocol other than like ensuring that you didn't get exploited or your funds are lost, meaning just like portfolio tracking opportunities, and then the rest is just controlled via AI agents. And so you might have to just, I don't know, change around portfolio allocation once a month, or like strategies in terms of like how risk averse you want to be. But yeah, I don't know if we'd be interacting that much in terms of like DeFi meets AI if things go where they're supposed to the next 5 years, where everything's just fully automated at that point in time.
AI phone, no apps, done.
Say everyone in this room would have their own portfolio management agent that is going to manage their portfolio of both tokens as we know them today and tokenized equities, tokenized real estate, just about any asset that you can think of in a tokenized manner, of course.
All right, wonderful. Well, thank you to our panelists. Appreciate it. Thanks so much.
And then we'll be done. Thank you, cool. I don't know what the panel is, or we'll deal with it one afterwards. All good. All right, moving on. We're cracking through the day, not too far behind schedule, so everything's looking good. For our sixth keynote speaker, I would please like to introduce Alan from PayPal Ventures. Now, Alan and I were just talking out back and earlier on around looking at ways to bring data online, onto blockchain to enable traceability. So really excited to hear what he has to say about that, and plus how PayPal Ventures are integrating or looking at the AI space at the moment. Was it Matthew? Was that, yeah. Lovely to meet you, Kira. Nice to meet you. How did it go?
It went
I
well.
caught the very start of it, and then I got pulled somewhere else and didn't hear the rest of it. But
Yeah, it was good. It was actually my third panel today, so like I'm,
Oh my
I'm getting
God.
sleepy. Like where it's like I need some coffee. or
everyone
caffeine.
there's still coffee out there as well.
Nice.
But yeah, there's a lot of people with like first, third, whatever panels they're doing on the
Yeah, it
day.
seemed like
so.
for whatever reason Friday was like super stacked in terms of like number of events and like speaking opportunities.
Which doesn't really make sense, but I don't know. Maybe it's people who are working for the Monday, Tuesday, they come here for the next. I was like, why hasn't it started? I was like, did I forget something? But nice to meet you, Avalanche. I connected with some of your guys. I think I'm so tapped in.
Yeah, I think it's on.
Can we turn this off, please?
Maybe it's on. Yeah, I think we're actually connected on Telegram.
Oh, because
I'm Matt and we just connected. I think MH Ventures and App Labs.
Did you? Oh, yeah. I spoke to some of your team. And
Yeah,
oh, yeah. Nice.
Is it not?
All right. I swear, I usually am better with tech than this. Hi, good evening. My name is Alan Du. I'm a partner at PayPal Ventures, focusing on AI and deep tech infrastructure investments. Very happy to share a stage today with some of the most forward thinkers in both the AI and blockchain space. So I'm pretty excited to share some of the observations I've had in this space, particularly around AI development and the sort of the slowly emerging convergence between AI technologies and blockchain technologies, particularly around its ability to unlock what I believe to be a brand new sector of the economy and drive potentially trillions in value creation. So, I mean, it's no secret that the widespread adoption of generative AI has become a reality in the last 24 months. And you can't really overhear any conversation without hearing the word Gen AI in the Valley or any major cities. And with that, I think the ease with which fake content can be generated by AI is really alarming. AI now can easily churn out text, voices, videos, and even generate interactions that mimic humans that are virtually indistinguishable from reality. And meanwhile, things like civil attacks where one agent or one entity pretends to be many has become far cheaper and far more scalable. So with the ability to mass produce, convincing replies, posts, social media interactions at a minimal cost, the barrier to flooding the internet or the digital space in general with fake information, for ulterior motives, that barrier has essentially disappeared. So this is why, in the age of AI, or as many fear, the age of deepfakes, what is really real anymore, right? Here's just a quick illustration of how cheap has become to create false information, or as some call, less sinister synthetic information, synthetic data has become. Right now, to generate 100,000 replies on Twitter, it only costs you $25. And obviously, this is a very simplified version of it because most platforms do deploy some type of anti-bot algorithms and then try to filter content. But this is just a simple illustration of this increasing volume of synthetic information or fake information that's coming our way. And so I think AI as a technology has the ability to prove to be one of the greatest deflationary forces in human existence, probably aside from, the only thing that I can compare to is probably nuclear fusion that will reduce energy costs to virtually zero. Now, and some of the things that we already see today is, for example, code generation is getting more and more automated and getting far more accurate. And we're beginning to see upscaling of apps become essentially infinitely cheaper because a solopreneur or a small team of entrepreneurs can spin up compute clusters and scale their apps to millions of users instantaneously, virtually. And user experience or UI design has also been very much commoditized, where UI website or app can be simply designed with the push of a button by AI almost instantaneously as well. So in this world where it's increasingly getting filled with AI generated content, how do we know what's even real anymore? And I think the true test will be whether your apps or your data, your interactions are authentic. And this, I think, will be the line that separates the good from the not so good, from the utterly useless to the downright harmful when it comes to content, data. And therefore, I think there needs to be this type of filter similar to your email spam filters that protects your inbox from the ever-increasing volume of spam. And this filter will save your applications from fake data and fake users and fake information in general. So I mentioned the need for this sort of filter or protocol to source and deliver high-quality data, authentic, reliable, secure data between data producers and data consumers. And this protocol needs to provide a crucial truth layer or ground truth layer for verification and filtering. So while the exact models and heuristics, I think, will differ by domain, whether it's online application or blockchain, or some other form of private networks, I would venture to say that in the near future, almost every single application will require some layer of protection similar to this. And as I mentioned many times before, in a world increasingly filled by AI-generated content and data, trust will become the ultimate currency or the most scarce resource. And real users, real data, real interactions will define good applications and successful applications from the bad ones. And the networks that can maintain this trust in its users will ultimately thrive. Now, the need for, I think, ultimately the need for this data integrity will be as common and as universal as the need for GPUs or need for electric power. And I think without that trust, the digital world may potentially collapse under its own weight of its fake users, machine-generated content, right? I'm sure many are familiar with the concept of dead internet, when the volume of machine-generated data overwhelms the volume of human-generated data. And next, I think this need for data integrity is probably felt the strongest by enterprise users, or the ones that are most intolerant when it comes to risk management. Because when you don't have a good way to track the lineage or authenticity of your data, the integrity of your data, this weakens your entire foundation for your risk management model. And I think, first of all, inconsistent data really weakens your models. That goes without saying. And real-time responses can also be hindered by silo systems or disjointed systems. For example, if you're, say, Uber, and you're running some kind of a safety mechanism or algorithms to monitor for route deviation, if you don't have a single source of truth, it could be a matter of life and death, right, when it comes to rerouting or calling for emergency services. And another major hurdle is challenges around granular or fine-grained data control. For example, I think at an organization like PayPal, when we try to deploy AI or train our AI, on our own data, a lot of times we get told, hey, you can't touch that because it contains PII, which by law you cannot feed into the model, right? However, the data that we often need from these data sources are the ones that are the non-PII portion, right? So if we have some way of looking at the data at a much more granular level, right? Maybe at a cell level or even just column or row level, as opposed to table level, we can actually leverage our proprietary data much better without touching or tripping any sort of a PII, PCI compliance rules. And lastly, I would say, the lack of transparency also undermines trust, right? So say if you're Airbnb, during the user onboarding or the host onboarding process, how do you get the host and the users or the guests to trust that process and trust the outcome if you can't somehow show that what has been the decision process, what are the documents or data sources used, right? So lack of transparency will destroy that user trust, your network. And this perhaps, this is the most important point where, as I think the previous panel had talked about, this data economy, getting paid, compensated for contributing data, generating data that's high quality, trainable, usable. How do you enable that actual data economy if you can't properly run attribution? If you don't have that data lineage tracking capability that allows you to understand where that data came from or who created that data and how it's being transformed and manipulated along its entire life cycle, you can't ultimately have an efficient market that prices these assets. And obviously, as a result, you are not able to compensate the value creators, the data contributors, or the model contributors. So, I think what's really interesting about blockchain in this case is that, we talk about the need for this kind of ground truth layer where, I think some of you may recall there have been recent incidents where AI, whether it's GPT or Claude, will essentially hallucinate and cite articles or incidents from very reputable sources that never happened, right? And this actually had led to real legal cases or formal complaints. And there's also a recent case where it was a legal AI vendor where they generated briefs that cited the wrong date because the machine was hallucinating, that caused the law firm to lose a $100 million lawsuit. And so you can see that when you don't have a really robust data lineage tracking method, these things can happen and cause massive economic loss. And so I think there's that potential for a purpose-built blockchain that serves as the ground truth layer for managing AI-related assets, right? Whether it's data, whether it's model. And blockchain, I think, is particularly well-suited for this use case, involving diverse participants from a very decentralized environment, where managing the process flows and data hubs is both crucial and challenging. So blockchain, I think, could provide that transparent and secure way of tracking data usage, contributions, and ensure proper attribution throughout the entire development journey. And we talk about unlocking this kind of new economy a lot, right? And I recall there was a very popular, call it layer one. I won't name names here. I think I see some folks here wearing their badges. They had this idea of essentially describing this new economic contract that needs to exist between content creators or IP creators and the consumers, right? So there's this kind of inherent or unspoken contract between content creators and the marketplaces that connect these creators and the content with the consumers, where you create the content, I bring the traffic, everybody's happy because everybody gets paid. There's proper attribution, right? But what's happening with a lot of generative AI, especially searches, search engines, is that when you search for certain things, you get a summary of the facts, not the actual facts themselves. You get a summary of them. You as a user are now disintermediated from the actual ground truth, right? So when there is no proper attribution, there's probably, if I were to guess, probably not proper compensation. So I, as a creator, for whether it's content, whether it's data, whatever it is, or model, what's my incentive anymore to actually go and create when I cannot get even credit? Let's set aside economic compensation, but just simply to get credit for creating things, right? So I think, therefore, there's this urgent need for a new economic contract between the value creators, whether you're creating original content, writing your own blogs, or you're simply contributing really valuable, high quality trainable data, or building some really cool version of a fine-tuned model. And I think that this market or this kind of new economic contract will help eliminate the inefficiencies or the barriers that exist in the current value exchange system, and allow you to really think about monetization, and essentially unlock this multi-trillion-dollar asset class, right? You think of this, whether it's IP or data or model, as a new asset, entire new asset class. So as a result of that, we do need a purpose-built blockchain to remove these barriers, to allow peer-to-peer transaction of AI assets. And an application can therefore on-ramp an AI asset catalog. An agent, whether it's agents, humans, or agent to agents, can then compose with DeFi applications where these assets can be fractionalized, can be used, can be staked upon, or otherwise leveraged for some economically profitable way. So the compensation happens when there's value being exchanged and revenue generated. Agents can therefore share a portion of that revenue with the original asset owner, the AI asset owner, via some kind of royalty module. And the agent-to-agent AI asset exchange are also viable, allowing sort of an entire marketplace of agentic interactions to grow with blockchain as the ultimate settlement layer for these types of agentic commerce. So, I think I've said enough about why blockchain is perfectly suited for this kind of use case. And they are the perfect foundation for AI interactions because they offer that programmable medium in which software can make hard commits, right? Call that sort of a SLA guarantee for provisioning, for usage or performance. So with that, this presentation won't be complete without sort of me doing a plug for PayPal. As we started thinking about building within the blockchain space and eventually launching our own stablecoin, we had the idea of forming this new way to pay, right? And I think what we've built at PayPal is particularly useful, or can be particularly useful for this purpose-built blockchain that enables agentic commerce. And we had this hypothesis of sort of combining these structural advantages of an open source, distributed, decentralized network with the kinds of innovations that can run on top of a foundation of fast, secure, low-cost, transparent, throwing other great keywords, that can be a game changer, right, for value exchange and by extension, money movement. Because most of the money movement that happens today relies on systems that are designed over 100 years ago. Money wires, ACH, right? These are ancient technologies. So we are very, very excited to see the development and the convergence between AI technologies and blockchain technologies, and see developers in both worlds come together and build really cool things together. So I invite you to kind of join us and help unlock a brand new sector of the economy that can generate trillions of dollars in economic value, all that's rooted in integrity, authenticity, fairness, and ultimately trust. So thank you very much. And I'd like to leave you with this quote. We go through market cycles when, whether it's Bitcoin, Ethereum trade up and down in 5, 10% in a single day. But I think the market often underestimates the potential of a small group of true believers who are here not as tourists, but who are here seriously building for the long term because they have something they truly believe in and they truly are committed to do that. So I love this quote. Never doubt a small group of thoughtful, committed individuals can change the world. In fact, it's the only thing that ever has. So thank you for your time today.
Okay, we have made it to our final panel, and thank you very much for sticking around. We always do save the best till last. So moderating this panel, we have Danny from Archetype, and in the hot seats answering the questions, we have Chris from Hashed, Chris also from Plume. I might have got a name wrong there, sorry about that. We have Matt from Block, Jason from Story, and John from SatLayer. So come on up, guys. Good, tired.
Everybody, thank you all for joining us for the final panel of the day. My name is Danny Sarsock. I'm a partner at Archetype. We're an early stage crypto VC based here in New York, and I'm joined by an illustrious lineup of speakers today to talk about the future of decentralized AI and how we really unlock its full potential. Before we dive in, I want to give each of our speakers a chance to quickly introduce themselves and what they're building.
All right, this is Stan from Hash. I think I'm the only speaker here sitting as a VC, not the builder side. So Hash is a multinational crypto VC. Origin started from South Korea in 2017 and now expanded to multiple different regions, starting from US in San Francisco in 2019 and Singapore we're located in 2021. We invested in over 150 different protocols, half and half, almost equally distributed across East and West, and also a consumer and infrastructure as well.
Hey everyone, I'm Chris.
All right. Hey, everyone. I'm Chris, the founder CEO of Plume. We build a chain, an ecosystem focused on bringing the real world on chain. So we focus on RWAs and other things related to the real world. We've got we're the largest ecosystem out there, over 200 projects building on us today, and the largest community with over 18 million wallets and a bunch of TVL. So good to chat today and talk about AI.
Hi, hello. I am Matt from Flock.io. I focus on ecosystem growth. Flock is a decentralized AI training platform focused on federated learning, and we are deployed currently on Base mainnet. We had our TGE and mainnet launch at the very end of last year.
Is this working? Okay. What's up, everybody? It's Jacob. I'm on the DevRel team at Story. Story is a purpose-built L1 blockchain for intellectual property. We actually just launched our mainnet and token 2 weeks ago. So still very new, but happy to talk about it today and happy to be up here with all you guys. So.
Hey, everyone. My name is John Lee. I'm a technical advisor at SatLayer. SatLayer is a BTC restaking platform aimed at securing and building BTC-Fi for the future. So we have a platform, we have validators, we're also dabbling into AI agents, basically provide Bitcoin as security. So thanks for having me and thanks for coming by and listening.
So guys, I want to start with an important overarching question. The decentralized AI space, sometimes referred to as crypto AI, has been around for a little bit at this point, and it's really come quite a long way. It's matured across all these different layers of the stack, from compute and data through to the model layer, and ultimately early signs of what a consumer ecosystem might look like. But at the same time, I think we have to be honest that the conventional AI space has continued to move forward at light speed, and I think we've barely made our mark. How do you guys think about the moment in which we find ourselves today? What key developments are you guys monitoring? What has you excited? What is making you think the question of why now for decentralized AI feels different from before?
Yeah, I'll take this first. So basically, in perspective of thinking of the AI as one of the subcategories within the crypto, I think definitely this is the first. Starting from 2023, I think a lot of the projects that are started from around late 2022 to early 2023, and that is actually the first wave of the AI infrastructure we're actually seeing in the space at a level of I would say maybe more articulated than before, but nothing really much. Before 2022, there was some the early AI projects, but still it was really hard to actually find the real use cases, and also there were a lot of the coins that just died out finally eventually after the season. But for this entire cycle, I think there was a lot of the improvements that has been made on the open source. I wouldn't say that a decentralized AI is now thriving, and also as you just mentioned, it's at par or even competing with the light speed, the development that has been made in the more closed AI space, with some of the companies now even having more than $1 billion revenue every single year. So basically, I think this is the maybe first experimental, also the VC investable the season that we can think of, and also finding some of the earliest use cases. I'll be really honest that this is not going to be the end game, and also the season that we're going to really capture the entire significant market share of within the entire AI space. But still, after maybe I would say about DeepSeek for a moment, and in the open source AI perspective, I think this was fairly one of the catalysts that we can think of, that the startups and the projects, even without the capex that they should put in the GPUs resources and some other stuff that should be run in a more centralized manner, can actually compete with some of the decentralized some of the centralized application. And I think maybe this is kind of this is the season that we really have to wait for the builder to rather choose building on top of the centralized stacks or the decentralized stacks. I think that the applications and the builders who are actually builders will be deciding where should be the key application will flourish from now. But still, at the same time, like as an investor's perspective, I didn't really see much of the AI applications that really derive the value compared to the ones that are building on top of central exchanges, central infrastructures. But out of the entire the applications that have been developed in the Web2 space, I don't really see that much of the development as well. Only like some early the chatbots are like taking significant amount of the entire revenue. So yeah, still early to decide whether the closed sources are winning. But yeah, I think we still need more time, at least like 2 or 3 years, to see the real applications that can compete at par with the ones that are building on top of the centralized ones.
Yeah, I mean, look, it's late, and it's the last event of the day, and I'm a little hungover too, so we'll say some things that maybe I don't mean, and we'll be a little spicier just for the sake of it. Look, I think the truth is, right, decentralized AI is like 99% of grift, and it's not real. It's used to hawk shit coins right now, and it's used to automate spam cannons, and just like, responding to shit on Twitter, right? That's like all it is. Doesn't mean that's all it's going to be, right? But as a comparison, right, there's been a lot of progress in a lot of use. I think there's a lot of interesting stuff happening in RWAs and AI. We can get into that too. But from your question, as a comparison to the centralized approaches, it's not even remotely close. Like it's OpenAI does billions of dollars a year, and they grow still at over 100% year over year, at over $1 billion already in ARR. That's unheard of. Completely just unheard of in anything, right? I had a company today tell me they were doing 20 million ARR, and I was like, holy shit, you're like making money, So just to give you a sense, we don't even consider making money yet, right? For the most part, when you have another application, it's just one of many that does, that grows more than probably the combined revenue of most dApps in crypto today. So it's not even a comparison set. And if anyone's ever using these AI products, they're fucking terrible. I mean, let's just be super clear. Who uses them? Let's just be honest, right? Nobody fires up this shit to use it. You open up ChatGPT, you open up Claude, you open up, Perplexity, right? The only thing you use the AI stuff for today is to sell shitcoins, right? Which is fine. That's a use case. But let's just be clear about that. So it's not anywhere. Now, all the early stuff in anything is used for nonsense. So I don't mean it pejoratively either. So I don't want people to take it that way, right? Early crypto, even today crypto is a lot of nonsense, So that's totally fine. I don't think it's a negative thing. But we need a lot more to go to make it even remotely in the same plane or playing field, or to even use it to expand anything that we're doing today. Because the basis of making AI useful, right, is making crypto useful, right? And crypto today is still sort of searching for a lot of actual use cases. And so we're just like, it's so many orders of magnitude apart.
Yeah, I think I agree that it's 99% grifting. But I do think that there's that 1%, that's where the innovation is happening. And what I also like to think about is right now, most people are, they're primarily in it, number go up, or just trying to dump on their friends, PvP type world. That being said, there's a 0.01% of like that's attracting, professional machine learning engineers, it's people that have built enterprises around AI that are coming into this space that are saying, hey, like I can actually contribute here, like as an individual contributor. I don't have to be, bogged down by like corporate bureaucracy, corporate hierarchy, and I can actually make just as much, if not more money developing in this space, doing something I'm passionate about. Like one specific use case that I've been really interested in following, where crypto is like actually useful, crypto and blockchain is actually very, say what you will about, the token, the TGE event, or the TGE. That being said, like, I can stake I can go into the app, I can stake my VVV tokens, and I can basically, I can get VCU, which is basically Venice compute units, and I can get free inference on that stake from staking that VVV. And to me, like that we're starting to get there. So yeah, I'll leave it at that.
Yeah, I totally share a lot of the pessimism with like the current status of AI agents and what they can do. But just to extend upon your why now question, I think there's a few reasons. I think, just the simple fact that, there's no code solutions like Eliza to be able to, play around with stuff. I've actually made an Eliza plugin myself, and even I think Eliza does nothing, right? It's just a reply guy on Twitter. But that being said, it's really cool for developers to be able to go in and extend upon it, right? Extend upon it with your own plugin, your own, crypto tooling, whatever it is. And on top of that, we see these advanced LLMs like DeepSeek open sourcing their models, right? The fact that I can download a sort of version of that, right, distilled version of that on my computer and run it is incredible. So I think all these excitements, along with, for example, DeFi and AI sort of tapping into the real world, Plume doing RWAs, and I saw this tweet on Twitter that was like an AI or Eliza agent is able to order a Domino's pizza through their API. So, and on top of that, we have DeFi onboarding, RWAs with both Plume and something that we're thinking about at Story. So we see both DeFi and AI tapping into new aspects of, real world assets. And I think that's sort of why the momentum is ticking up right now.
Yeah, I think right now with AI, there's really 2 points of view to look at. One is like the capitalistic view, where Mark Zuckerberg is saying we're gonna not have any mid-level engineers in 2 years. And I also look at it from a productivity view, where now it's easier than ever to actually produce code. My background is in computer science. For me to build like a landing page 10 years ago would have taken 10 hours, and now Bolt does it in 2 minutes, which is incredible. So for me to teach my 4 nephews, who's 5, 8, 10, and 12, the fact that they're able to build really cool stuff without knowing too much, it's awesome, and it flattens the curve for folks that had to go to college versus now you have low code solutions, and I'm really optimistic about that. I think also when looking at these AI models, everyone looks at it from the perspective of apps, right? Like Claude versus Sonnet versus ChatGPT. I think something that's often overlooked is actually at the silicon level. There's a lot of really cool compute units that NVIDIA and AMD are looking into that will, exponentially decrease power consumption and increase productivity. And I think those will also be kind of a catalyst for the next generation of chips that will come out. Because at the end of the day, this is a hardware problem to some degree, and whoever has the most supply of silicon and semiconductors and the best NPUs, they're going to win the compute war as well. So it's really cool to see from that front.
Let's take it a step further and talk about the infrastructure stack that's getting built out in the DAI landscape today. Where are you guys most focused? And perhaps to take it even further, are there parts of the stack that absolutely need to be decentralized? And conversely, are there parts of the stack that just inherently make more sense to remain centralized for a variety of reasons? I mean, is DAI something that has to be decentralized all the way down? Or is it going to be sort of this decentralized storage 2.0 kind of thing where we tell ourselves one story, but practicalities, efficiencies, costs dictate that certain parts of the stack ultimately remain centralized?
I think if you look at decentralization today and look at like how it actually works, like just look at any DAO as an example, right? If anyone's been a part of a DAO, people know how impossible it is to do anything. And we're talking about getting people to vote on nonsense that doesn't matter, right? And these are people ostensibly who have an economic interest in this thing. So getting people to do some coordination for some task, as simple as clicking yes or no, we have not been able to do. So my belief that we can coordinate people to do harder things is very low. Now, so I tend to think almost every part of this should be centralized. So unless you look at the part of the stack, so what are the key problems today? Hardware problems, right? Hardware is a real thing. I just don't know shit about it, so I won't opine on it too much, but I tend to feel like that's going to be hard to decentralize. One thing that's like fairly obvious to me, I could be wrong again, that like also, if you look at another part of the problem, training data is obviously a huge issue, right? We just have not enough training data, and synthetic data is not doing the job, right? And so it's very clear that like, we need more training data. But it's also unclear to me how you do that in a decentralized way, because today we always steal the data. People steal data from the web already. It's like it's already somewhat like it's owned by people, sure, but like you can already get it. So like I think that's, to me, it's an area that I do think is worth it. And I know what you guys are doing and a lot of things like I do think to me that's probably the one area that seems reasonable to try and do in a decentralized way, right? Because like we just need more data. We need people to give it up, right? So we can scrape things from all over the web, but having people to produce more, right, in this way, I do think that's probably an area that makes sense. Outside of that, no, not at all.
Yeah, I totally agree. I think that there are some parts of the stack, like, things like storage, storing huge, file assets. That's not, you can't really decentralize that right now. I don't think the tech is there. I think there's other things like fine tuning that's difficult, although I honestly would love to hear from Flock. I know Flock's doing some stuff with decentralized fine tuning, and I think that's super cool. But I totally agree. I think that, IP and data is something that we can really look into at the beginning and start to decentralize. And it's something we've been thinking a lot about at Story. And actually the previous talk, the guy at PayPal, kind of described this perfectly, which is, right now there's this problem where the old contract of the internet is breaking, where people that are creating IP and data are not getting paid anymore, and the revenue streams are broken. If you publish a blog and the old contract said, okay, if I get more clicks, I get more ad revenue, and that's my revenue stream. Now that's broken because it's being synced by OpenAI and all these LLMs. So we need a way to decentralize IP and to allow agents to programmatically tap into intellectual property and licenses via an API call, right? That's in a smart contract that's enforced. And I think that's definitely one of the ways that we can harness decentralization at first.
Yeah, plus one that I actually really like that take where, right now we have this blurring lines between crypto and AI. And I kind of look at what happened in Silicon Valley from 2014 to 2018, where every single FANG company out of one summer decided to build a video conferencing like hardware, like TV thing, like Google Home, Apple Home, Amazon Echo with a tablet basically. And it was essentially surveillance. And I think what's a little bit scary about the intersection between crypto and AI is AI needs data to train, and all these like big companies decided to like sell like video conferencing machines to like train data. So it kind of blurs the line a bit, which is really interesting. And also within our industry in blockchain, I think for ever since the beginning of the white paper, it's like Bitcoin is founded on decentralization or die. But now we have this like really interesting intersection with AI in which now, there is a real big choice to make. Like at the end of the day, you could have centralized or decentralized layers. I mean, there's going to be, of course, pros and cons with training, interference, data storage, and governance. So it'll be really interesting to see how it all pans out.
Let's take a look at the model layer, right? Are we, if we're being honest with ourselves, the Web 2 centralized models have powered pretty much everything that we call crypto AI today. Do you guys believe that the future of the DAI space will be powered by frontier models developed by the same entities that dominate the space today, whether closed or open source? I mean, setting aside the conversation around ideology and decentralization, or is there going to be a need for crypto native models, things that are built from the ground up using on-chain data, built for the purposes that we actually need them on-chain?
I think we need to think about what are the actual purposes we need. Oftentimes people focus on process, which is good and important, but we also need to focus on outcome. If I'm just trying to get a quick answer to a question, yeah, I'm gonna use a centralized model because it's easier, it's a better interface. And to quick touch on the last point, like I think the interface layer will always be centralized, but it's gonna be an expression of preference. I might prefer to, interface via like via my voice. So there's gonna be an app that's, optimized for that, right, versus text. But specifically on the model layer, where I do believe that this is part of the reason I joined Flock, where decentralization is not only like a better option, but it's a necessary option, is when we start to implement some of these new machine learning processes like federated learning, so we all know that all of the publicly available data is already baked into all of these, these base models. The new quote unquote frontier for data is private data, data that is living on, local on-prem local servers, enterprise data. So federated learning is a process by which a global model is trained on local private data. The data stays private, but there are certain weights and gradients that are taken from that are then aggregated with the global model. And that helps to coordinate, competitors, for example, say hedge funds who want to like learn about, they want to keep their strategies private, but they also want to get better, they want to learn about not directly what other hedge funds are doing, but there's a wisdom of the crowds to be gained, and something like federated learning is able to facilitate that. And I think that blockchain and crypto is actually necessary for that, both for the transparency at the transparency layer with blockchain and with the crypto layer for incentivizing people to participate.
For me, I just wanted to make it simple. I'm not, to be really honest, like a true believer that like crypto is like a bigger, like I think like a lot of you will like definitely resonate with this, but yeah, I think like crypto can be like a subcategory or like anything, the decentralization and some like transparency and some of the other core pillars of like crypto can be like additional, like complement with the existing AI. Because like I think if we think the crypto is a fundamental layer that like handles all the AI, I think maybe that would be wrong and like a lot of the perspectives at least as of now, because like definitely as we all like agree on this that all the products and the infrastructure that are now like thriving, like comparably thriving in the space is all coming from the centralized one. So I think it's we really have to like shift a bit of like mindset to improve the existing centralized AI with some of the complementary things that we can do in the decentralized AI. Not really building something like search in a like solution to the problem and try to start everything with the crypto side. But still generally I think ideally and if it's a like capable thing, like a toolable thing, that maybe all stacks in the AI can yeah, it's gonna be better. It's gonna be a better world to like bring all the verifiable compute, the inference and all the like training to be more transparent, and also the entire logic to be like shared with all people who actually works on top of it. So, but still, I think it's a bit of like ideal as I'm now to discuss that, because like you also mentioned about the like compute, like the hardware, the bottleneck we have as of now. But still, yeah, think basically at the end of the day, having all the stacks in the decentralized part will be a lot better in many cases, since we cannot really like think imagine like how the world will look like if the like centralized AI is like 100% dominant, and we cannot even like verify how they're thinking, how they are collaborating with each other with the centralized like agents, even like 100, I wouldn't say 100, like a few, like a billion X like better than like inferencing, thinking, like literally everything than the human space, human race.
Let's talk a little bit about data, because you all mentioned some optimism, albeit early, around the possibility to decentralize data in ways that make sense. What are the opportunities to monetize, to leverage data look like in the context of AI, and especially how those look in a decentralized setting? Because I think there's been a lot of excitement about it, but nobody's really figured out where actual value is created, how you actually make something that people want to pay for, that can be used from a point of utility in the creation of models. They're excited about giving users the power over their data and returning it, but nobody's actually figured out how to create something of value. So how do we cross the chasm between this idea of, okay, this is a problem we'd like to tackle, we have the rails potentially to address it, but we're not there in terms of the actual use case and the value? What's the gap, and how do we cross that chasm?
Yeah, I think this is something we've been thinking a lot about at Story, which is just as you mentioned, there's so much data out there that's created by users, but as I mentioned before, it's not easy to capture the value of that, because models are just training on that data, not properly paying back to the original content and not giving it proper attribution. But what people do want to pay for is the AI agent, is OpenAI, is DeepSeek. People are paying, OpenAI is making billions of dollars a year, right? So I truly believe that OpenAI has reached, a point where people, want it and love it. And that's because of the data that it trained on, right? And so we need a way to programmatically allow OpenAI, or really enforce OpenAI legally, to pay back to its original training data. And I think how that actually is specified is still sort of up for grabs. How to exactly do you group training data? How do you, make sure you capture every single piece of data an agent is training on? But just at a base level, the ability to register the data or encourage creators to do so. And then any time that a agent wants to train on it, it has to abide by those license terms. So to say, okay, if I use this data and make money from it, I have to pay back a 10% revenue share, or I have to pay an upfront cost to use this data, or I can use this data, but I can't create remixes of it. So if I ingest an image, I can't create a remix of that image. And this is an issue we're seeing all the time. I mean, I saw a tweet where, Grok was outputting a image of Princess Peach going to war. And someone said, okay, well, if, if someone saw this, like, there'd be massive lawsuits, right? So Nintendo would just go nuts. So anyways, I think that while maybe it's hard to see the value of data directly, we absolutely see the value of models that have training on this data, and they should properly pay back and give out proper attribution.
I like the idea around that. I personally am I'm less convinced that the economic model, like paying people creates better content. I guess I'm not a huge believer of it yet, which doesn't mean I won't be. I changed my mind 3 times. Near. So it's not like it's unclear to me, but because look, people today already can like monetize their data plenty of ways, right? Clout is a real thing. Clout is better than money in many ways, right? And like, getting a bunch of people to like your tweets and retweet your stuff and like retweet your, like, it's a thing already, So like so anyway, that's one form, right? So like getting, writing something good and having people like remix it, like it's already a form of social currency, right? It may not be physical currency, but in many ways, like it could be better, right? So there's that. 2 is, we can already steal so much stuff from public, you can, what was it? The last OpenAI model, the voice one, had used Scarlett Johansson's voice, right? It's not like it was sanctioned, they just did it. I've seen like a whole Star Wars movie already based on AI stuff, right? So like, it's, I personally, like, I fail to draw the line between paying people for this stuff and all of a sudden it becoming better, right? Because I don't think it's about drawing the alignments of the incentives. I think incentives are already there in different ways. Sure, money can help a little bit. We are like an order of magnitude, if not more, lacking data to make these things better, right? Significantly better. So it's about creating net new data, not getting people to do a little bit more here and there again, or try to make better data or whatever, right? Like I just don't think that's a thing. And so I think ultimately, if we want to do this, having some kind of way to pay people make data, I can see it, but it's not quite the same thing as like drawing a line between these things, in my opinion. I'm not totally sure like how it works, but I do think we need more, and I don't see how you do it without getting everyone to make more. But I don't think it's totally like a royalties thing, I guess.
And then maybe let's talk just finally about the consumer layer. I mean, I do think where crypto might be interesting relative to conventional AI is sort of the agents boom and bust that happened in the last couple of quarters, right? We are seeing inclinations of what a new consumer layer could look like with this technology in a way that we're not necessarily seeing in Web 2. And now I think the agents meta that happened in the last couple of quarters was largely a bunch of bullshit and probably did us a disservice in the community of AI that we're trying to penetrate and attract from a talent and a legitimacy standpoint. But maybe to give it the right credit, it at least asks the right questions of what the early signs of a consumer layer could look like. How do you guys think about what we saw there? What worked, what didn't work, and how much of that form factor is indicative of what might be durable in the longer term in terms of a DAI consumer layer? Or is it going to be completely different? And this was just a complete GameFi like boom bust, and we're going to do something completely different.
Yeah, I think the meme coin AI meta was really interesting because that was like the first signal that we saw from a broader level that people are interested. People were engaging, of course, investing, but they're like, wow, this is going to be a coin that's going to be backed by AI and it's going to do my investing and yada, yada, yada. And you mean there were pretty notable projects that reached, a couple $1 billion market caps. I think that is a signal that retail was really interested. Now, I think in the near term, as this next kind of quarter, we are going to see a lot of new DAI like integration with the best liquidation partners or even portfolio managers. I think that will be a really interesting play. And then looking forward, I think not only are we looking at it from a monetary or an asset management perspective, but I would love to see examples where DAI is now being incorporated in media forms. For example, a first world like generated procedural roguelike game, or maybe integrations with DAOs. I think that will be a narrative that I personally will look forward to.
Yeah, and I think that integration with DAOs really, what it sparks for me is, so we got to think about who the consumers are. We often think about it as the end consumer, retail, but also like as we move toward an age of like sort of embodied AI, i.e. AI that is deployed into agents, like physical agents and robots that have agency in the world. It's incredibly important to understand how these AI systems work and are governed. And these are types of problems that, like, again, thinking about, okay, robots are really the consumers in this context. How are we governing these systems? It necessarily needs to be transparent. It can't necessarily, if it is governed by a single control, like a centralized controlled entity, like we are fucked. Like that means we are in this dystopic world. So that's where I think about like agentic AI, decentralized AI is actually necessary at the governance layer, and the AI that's actually living in these sort of embodied agents, these physical agents.
I'd like to talk about a bit different things. So I would, like in the AI, the agent boom that we've been witnessing for the entire quarter, I think basically the ones that really picked up, like something like AISPT and Zero and whatnots and the likes. I think basically those were actually the entire the market cap was based on their the social capital, which is quite a hype, and I don't really want to justify that. justify that.